Okie dokie. Let's see how this is going this morning. Starting the week off weird. Another higher high after making a higher low is not a bad thing. Got a little M cross there. Little jump of the creek. Looks like it closed last week above that kind of major creek body. So, oh man, I really need to clean these charts up. Hey, happy Thanksgiving. Thank you. We're getting there. We're up 5% today, which is kind of nice. A little boost. GME's at 2.51%. Has not made a higher high yet. Does look like it jumped over its own little creek as well. That looks pretty good, actually. Pretty close to what we maybe expected here on the short term. Although it came pretty low, it had a bounce earlier than expected. It was kind of like right after Wednesday. It flushed into Thursday down to 27s, and then bounced out, made a higher low, and then jumped the localized trend down, the creek down, as you would call it. In the bigger picture, as you can see, it would appear that it's still kind of trying to reach for that marker, maybe again at 29.85. So, thank you, Miss Barbara. Appreciate it. For those that are celebrating Thanksgiving, it is a very American holiday, and even in America, there's controversy about Thanksgiving. So, Indigenous Peoples Day, Thanksgiving, really, the purpose of it may be a little bit lost. Maybe, I don't know. But the main reason we do when we celebrate Thanksgiving, we just give thanks, supplication or whatever. You just appreciate the things that you have. But I guess the original meaning of Thanksgiving may be a little bit lost on us now. Yeah, I mean, everything's popped quite a bit. On mine, everything looks green. MPW and AMC are kind of moving up about 5%. ChargePoint's up almost 7% today. It had that big move up. I was talking about this last week because I haven't really talked about it very much, and I feel like I should have, but ChargePoint has the potential to have like a massive spring bottom. I think I mentioned it like really briefly when we finished on Friday or whenever it was. If it can get back above kind of where it's at now, 123, it needs to kind of get above 123 and hold. Can't hook here, so if it stops here, that's too shallow. But if ChargePoint can get back above 123 here and hold, that could potentially be a spring bottom reaction. Just based on the way it's set up, there's a possibility there. So this is a auto reaction phase B top. We'll see into a spring. And then ultimately it has to jump the creek. It's so close to $1 at this point. Unless you think the company deserves to go bankrupt, there's not really any reason to expect it to stay a penny stock forever. So, yeah, that's up really big today. I haven't checked some of the maybe the otter balls that we talk about. Like, we'll look at WTO. It's actually down today, 3%. Not looking awesome. But let's take a look, see if it popped this morning at all. It did. It just kind of rejected. So, I mean, I know it's like not the most popular thing that we talk about. Maybe only a handful of people actually care about it, but I'm just going to kind of address it that quickly. Yeah, maybe a problem. We'll see. Because I always look for the cat ear pattern, even if it's not like necessarily going to break down. You don't know for sure. But usually that's a good indication that it could be some distribution. So I watch specifically like where those markers are set up. There's just so many barriers on this one. It's been really difficult to get a good read on it. It just keeps walking down. So I would say, again, unless it gets back above like 37 here, I think that's like the main floor. Then I don't really think there's much to talk about. It's still kind of pinned. It did make a higher low on quite a bit of volume, but yeah, that's about it for that one. And then I had talked a little bit about NNOX. We went through Knox quite a bit a long time ago, and then oddly enough, I kind of was worried that it was going to break this bottom, so I made an alert because on the big picture, it has the appearance of a really massive walk down here. Like it's just a huge wave up and then back down. You can see pretty clearly the wave broke through here. I mean, it's almost perfect, right? When we talk about these waveforms. And then if went into an earnings report that frankly wasn't very good. The technology itself is like an AI imaging. I think it's like orthopedic kind of stuff. I'm not really sure. I'd have to look at it again. It sounds promising. The main issue is that there's just this, from a technical standpoint, there's a lot of concern, I guess. So it could be a double bottom off of 530, which is almost like a quadruple bottom, 1, 2, 3, 4. But the dip low here looked like a sign of weakness way back in October of last year. So I had put this one on my radar a while back because I was interested in it, but it's still got a lot of room to move. It needs to move quite far in order to advance. So not quite there yet. We're sort of like sitting on the cusp maybe, but it's had a really big run the last week or so because of, from that bottom anyways, it's run like 26%, which is quite a lot. Still not exactly the best. Needs to kind of continue, obviously, in order to keep going. So that kind of hits the highlights for the extra stocks. Let's talk about IWM. So IWM, the small cap index, is probably what's rallying a lot of the market that we look at, because a lot of the stocks that I look at on this channel are small caps, and they tend to be more volatile. They tend to be a little bit, they punished very easily, if you want to say that. Like when the market turns red, the small caps get really like down, and they don't tend to hold up quite as well. And then they haven't had a real rally. So the one thing about IWM that I had been concerned about is that it hadn't actually breached all-time highs. And it may be very much right there right now. So yeah, it's pushing it. It's like right on the dot. Maybe it is at all-time highs. It looks like it is. So this is the first day since 2021, in November of 2021. So it's been 3 years since the small caps have made an all-time high. So that is a big deal. And so there are a lot of folks out there who are talking about the market needing to correct or this or that. And I gotta say, I don't necessarily disagree that there could be more correction, maybe for something like SPY or these larger companies that had these big rallies. They are individually correcting here and there. I mean, you go look at some of those top movers, it's not like they're all straight up. You know, NVIDIA was the big one that kind of scared everybody, I think, because it had such a huge rally for such a long time. It just didn't feel sustainable. And you start asking questions like, is this company really worth this much? And maybe the answer is no. The market, however, likes to price in the future. And so if they think in the future that NVIDIA is going to be the leader of AI-driven technology and graphics cards and stuff, chips, whatever, then yeah, I mean, technically they could be worth a lot, you know what I mean? And I think people were kind of expecting it to be like a bubble almost immediately. But if you look at AI, it's been building for years and years and years, and it's finally kind of coming into the mainstream. So this reminds me of when Apple introduced like the iPhone, you know? And we had stuff like before then. You talk about like the iPad or or the iPod. It was like iPods. Yeah, they stored all your music. But they had developed all these interfaces, right, that would later go into this phone technology. And it seemed impossible because you're like, well, the iPod was huge and clunky. For its time, it was small and portable, but you look back on it and you're like, wow, that was in and of itself, like it was a lot for just that technology. You can store most of that stuff on your phone now with a bunch of other things too. That's just the way technology is. So like, I feel like it's sort of a similar advent where the market's going to start pricing in more and more because it's becoming a consumer product now, as opposed to something that's kind of behind the scenes building. I feel like it's the same way. I think there's going to be a big push in the beginning. You'll have some time of kind of catch up where maybe we don't have as much market push, and then it's going to eventually like push again. So I don't really find that technology to be a bubble. I don't think it is a bubble. I think it's a new kind of age of technology, a lot like, in some ways, like the internet, and then what happened with like phones and the internet. And you're getting more and more of that consumer buy-in. So all that being said, what does that have to do with IWM? Well, IWM we were looking for something maybe along the lines of like, we called it like, it wasn't dissemination, but it was kind of like this idea of dispersion, like taking money from these big rallies and then putting it into small caps. And rightfully so. I mean, it didn't take the time that I thought it would take. I thought it would be a little bit shorter. So I thought maybe I think originally I had like somewhere in around August, September, and not October, November. So it was a few months off maybe. But I had originally kind of thought it might rally earlier ahead of elections. And it really didn't rally as hard until right after elections. It finally broke out from where it was stuck. So high of 244.46. So when I look at it, again, a lot of people were saying, well, we think that the market's in a bubble. We think this technology rally is going to fizzle and then everything's going to correct and come crashing down. It's the same rhetoric that we were experiencing during the market correction that happened. And I think that a lot of folks forget that it was a long time. I mean, I think it was like 24 months or something. It was 2 years before SPY made another high again. And that's crazy. That's a long correction for that index. So I think there was a lot of folks that frankly were expecting a bigger correction. We didn't get a bigger correction at that time. So they're still saying, well, I think we're still going to get a bigger correction. Market's going to dump. Market's going to dump. Market's going to dump. I've been hearing the same thing every single time there's any kind of a rally for the last few years. And largely you would have just kind of not participated in that rally. You know, like if you just kept saying that, you just would have eventually been like, okay, well, it's rallied, you know, hundreds of whatever it is. I don't think it's been 100%, but while that's going on, I'm looking at small caps and I'm like, they really haven't taken their turn yet. And we started talking about them a lot more going into this year because they had gone into an SOS. And this is why this has been a painful, perhaps, maybe almost boring watch, because it's been very choppy, but it has been moving up. And the hard thing about this is like a lot of folks, you hear the criticism here on the channel, also even in the Discord to some degree. There's this kind of hum beneath the hum, I guess, about how, well, it's not really going, you know, small caps are getting dumped on. I remember when it pushed up into July, everyone was really excited and saying it was going to rally to like 300 or whatever, you know, it just like starts going off the chain and you're like, well, from my point of view, like the way this moved has always been a lot more methodical, and I don't see it as a bad thing. I see it as just like slowly building. And I think the reason for that is that you need to prove a little bit more with small caps than you do like the larger ones. Small caps and large caps in this kind of a market, these ETFs are made up of like value plays. They're made up of this one in particular. You know, a lot of people consider it a value play because they're really undervalued in a lot of ways at the moment. If the economy recovers, they were in 3 years without making a high, and now we're finally making one. I mean, it's a pretty historic day. But you think about how long it's been since these small cap ETFs have made it even here. I mean, that's 2,000 in the Russell 2,000 stocks that are just kind of not going. And individually, like some of them are better off than others, right? Um, Anyways, my market knowledge is going to be limited there. I'm not obviously looking at 2,000 individual stocks, but point is that I think there's a lot of folks that were maybe overestimating this bearish idea, thinking that it's going to have this massive drop. What I've been saying is that I don't think that the small caps have even gone yet. Like, I don't think they've even had their turn to rally. They've had this big push up over the last, I don't know, I guess it's been almost a year, 12 months. It's 50% up. That's a big deal, but that's all recovery from the drop, you know? And so I had, again, originally put up a figure that maybe around October you can see on this S curve. And it took longer, but it's still going. So predictions aside for timing, it's been pretty accurate. Even this S curve, slightly off, but like still pretty darn close, you know. Oh, you said November 11th. It's really like 10 days later or whatever. Yeah. So anytime there's these big rallies and the market was dumping, I hear all kinds of stuff about, oh, it's not, you know, it's this or this or this, or you forgot this, you forgot that. I'm like, I don't know. I think that small caps just have a lot more to prove. There's a lot more at risk, perhaps. They're more sensitive to certain things than other things. Like, and we've been talking about rate cuts. They're really sensitive to rate cuts because of the higher debt load that small caps carry, things like that. So happy to say, and this does matter because AMC is in that group, as is GME, as is a lot of the stocks we look at. I'm happy to say that they finally hit an all-time high today, which is a big deal. And it's up 2.45%. Now, with that being said, from a technical standpoint, do I like it as much as I could? Probably not. I think I'm looking at 3 hour. Let me go to 4 hour. Now, ChargePoint just flipped something. It must have pushed. I don't really like that there's a couple gaps here. It seems like there might still be one at 230. I'm not going to look that closely, but it looked like after it broke out of that trend, it kind of gapped up a little bit. Didn't correct, and it's been consistently buying, which is fine. So the volume's been fairly consistent on this push-up. This is fairly normal, though, for AMC as well, or excuse me, for IWM as well, because you can see on all of these push-ups in the past, there's been pretty regular, consistent buying and selling volume on these upward moves, and then there's a correction once it kind of reaches the target it's looking for. And the correction is consistently, you know, sideways and down, making a higher low, but takes time, right? Some of them have been massive, but these guys are fairly regular, so it looks very similar to that. On the big picture, I would say that this would be a great place. I already have it drawn out. This would be a great place for a larger correction if we do need one. It sounds, again, kind of counterintuitive because you're like, well, I thought you just said they hadn't even hit their rally yet. Well, they haven't. And I don't necessarily think they're going to go all the way back down like this. I feel like this is pretty almost bearish. But they did come back. They hit that creek like perfectly, that green line you see on the screen. And that was all the way down to 226, like 40s. And then we're rallying to new highs. I don't necessarily think it's going to go much higher than between here and perhaps 250 before having another kind of corrective moment. Again, you might say, well, I don't really know why you would need to do that. Like, if they really haven't had their moment, why are we doing that? Because you can see in the way this builds out, this has had an SOS, and then it has like an SOS within an SOS. It builds out layer to layer here as it's been going up. We're checking all the liquidity as we move back up, which is good. That's what you want. We spent 18 months or whatever it was, 2 years down here, then you're spending like 6 months, 3 months. You would expect to spend maybe a couple months up here near the top. Potentially, I would say this, okay? Because, again, historically, when this rallies, if it rallies really hard, it could just take off and leave. But typically, even in the midst of that, there's been a lot of sideways on the small caps. So a lot of time to accumulate. I'm really looking backwards trying to find This might be the only real example back here I can see recently. This was 2012 to 2014. There's a kind of a long-term rally. It stays within a channel. It doesn't go sideways. It does check the places it needs to, but it doesn't go sideways. And a lot of that was the recovery from the 2011 crash here. So I don't know. Maybe if we can get over the hump here, we'll just get that kind of a burn. I don't really want to see something like what we saw after COVID, because that could introduce a lot of sideways and down after. We don't really want to see it just go straight up. Then you have to come back and check all these levels later. Again, it's very methodical in that way. So perhaps if we can get some foundation here, I'm really looking at, I'm going to make sure I call the levels out here. I'm really looking at 233, because we had this topping zone, and we didn't, it's not like we didn't check it, but when we did that up thrust way back in 2021, we didn't really test it again. We just dropped through it and gapped down. And then here we approached it, and we kind of wrapped through it. That was what we did on this first push up and pull back. So there still hasn't been any real support built, in my opinion, over 233. So for now, I still think this is going to be an important level. I don't necessarily think you're going to come way back down. That's not 100% like, oh, this is what's going to happen or whatever. We did some long-term stuff, and I'm going to get to AMC, don't worry, but I'm just checking off these boxes early today so we can get through this. AMC, we're going to spend a lot of time on, of course, but yeah, you can see what I'm looking at here. This is very, very big correction, but this has to do with what could be a massive cup and handle. Technically, in a cup and handle, you can retrace up to 50%. So this could ultimately come back to 200 and still be a cup and handle that breaks out and rallies later. In reality, the handle doesn't have to be that big. It doesn't really matter. And I think I had hypothesized at some point that it would probably reach a peak by around June, or thereabouts, maybe shortly after. So a lot like AMC, you might have some sideways here and then rally again going into mid next year. We'll see, you know. Either way, big deal. So there is a massive gap on, massive meaning it's big enough to notice it, on IWM around 240s. And then, hey, good morning. And then you've got a little bit of headspace, maybe above, before you might expect there to be some kind of a backup. And I don't really want to leave without checking 233. So, which small cap companies are you invested in? A lot. I mean, AMC is obviously on that list, so that one's easy. You've got AMC, you've got GME, MPW would be on that list. ChargePoint will be, I mean, almost everything I'm invested in is small cap. I might have a couple mid caps because I have like I always call them mutual funds, I guess, but something like that. It's more of like an investment fund. It's not quite the same thing, but there's some different ones that I have. I have a bond ETF that I bought into, and a couple other things. Yeah. Because I believe in as balanced of a portfolio as I can manage, but I also want to make sure that some of the stuff that I'm investing, as I make profits in like these more risk-on plays, I put stuff in more regular kind of trading plans going forward. Yeah. For other reasons, so. Good morning, Glenn Miller. Excuse me. So, yeah. But yeah, I mean, like everything we talk about on here is pretty much small cap. So, potentially this has a breakout target because it's kind of a narrowing and a widening. It's a weird narrowing and widening. I actually think I may have drawn it a little off. Might be actually like here. You call it whatever you want to call it, but the diamond structure, typically if it breaks, does break about the height of the diamond. So this looks like it could go up to 520. That's a big deal. That's a big move, and I think that it makes sense. We've been talking about this for a while, so greater irony is some of the people, like, I banned someone on our Discord this morning, and so I don't really want to talk too much about that. There's not gossip about it, but you've been waiting for a long time for a move, and you're finally getting something, and it's just like, you know, at this point, yeah, I mean, everybody's kind of burned out, I guess, but I don't know what to tell you guys. I mean, you wait, you wait, and you wait, you wait, and sometimes it takes forever. But if it can make the moves, it's going to make the moves. So I don't really care if it happens now or it happens next week. December 4th was a big pinch point for me. It didn't seem likely that a lot of them would hit that target, but that they would go up into that target seemed really unlikely to me. Like, it was like, why would you do that right before Thanksgiving? So I even went on record to say I didn't think it was going to be a big week. And I guess I was wrong. At least Monday has been pretty big. So WTO, I checked it out this morning. I'm not going to go through it again, but I'll give you the number. I think it was 36 cents or something like that. Yeah, it needs to get back above. There's a support it needs to get back above. Again, I won't spend more than like a few seconds on this. I'll go back to AMC. I did talk about this already. Yeah, it needs to get back above 36.6. So it's just kind of making a footing right now. And if it can break out, let's say around 35.9 or 36, just right above it, it could potentially have a move up to like 54 pretty easily. It's close. It would be like a squeeze kind of thing. It would pop really, really far, but we're not there yet. So back to AMC. Is this what we wanted, Booksy? Well, kind of. Yes and no. I'm not going to complain about upside ever. You're not going to hear me say like upside isn't necessarily bad. It's just a question of like continuation, support, volume. Those things are really important. Feel like on the weekly, what we did was very important last week. And I know this chart's kind of a hot mess, but it's got all my marks on it. So why did it matter? Because last week when we came above here, that didn't happen. So thankfully we don't have to worry about that. When it came above here last week, this orange line coming down is one of the more outstanding creeks that we have. Now there's a few, and we've got a lot of different charts for AMC at this point because we're looking at some macro trends and we're looking at some more short-term trends, and then we're looking at really, really small trends. We're trying to track everything that we can so we can see the breakout when it happens. This breaks all of them. So it's important to note, like, there's none that are not crossed right now. So it broke out of the short term, leaped over last week, just enough to kind of get over that hump. You can see it on the left chart here. It closed, above 450s. That's a big deal. That was a big deal. I mean, it is what it is. And by doing so, it got above that 444. And what we had surmised, and some of you will remember, I always say that because I'm not really sure how much people will recall. Some people are in and out very, very quickly on these channels and stuff. But I did talk about this when we compared this to the March 2022 pop, like that big, huge one that went 160%. And what I said was I thought 444 was the same level that it would eventually bounce off of. Now, the problem was it was not bouncing off of it, was it? It was like chopping through it. So we had 2 weeks where it pushed up through 444. It closed above it 3 times, 3 weeks in a row, but it would not close above. It refused. You can see it kind of pinching here on these candles on the right chart. We refused to close above the creek. We just wouldn't do it. So it was a really big mess because, and you guys know this, because I was like, well, technically it looks really ugly on the weekly, but it's not breaking down. It made that double bottom. And I made a big point about that repeatedly, like it did not go below 417. And I found that to be very odd, because if you're going to have an upthrust and you're going to do it multiple times, I mean, it did it 3 weeks in a row, guys. 3 weeks it pushed up above the creek, and 3 weeks it closed beneath it. If you were a bear, you'd be looking at that like it's the trifecta of, I mean, it's basically just a huge bear trap right there, at least for now. So I look at something like that, I'm like, yeah, it didn't look great. You can't deny that, but there's something about this that I couldn't shake, and we had talked about 444 as a possible place where it hits because it correlated really well to what we saw in the 2022 build out. It was purely comparison. I would not have expected it to like land on top of 445 on the outside of the creek on this weekly and just pop. That to me looks too perfect, and I don't think I would have anticipated that. So last week we talked about, well, you could technically just chop right down here underneath like 440s, 450s for the week of November, and then maybe December 2nd, that week, push up. That's what I thought might happen. But it's weird looking back at this week and seeing that 444 and seeing that hit, and it's above the creek. It's just right there. It's clear as day. It made the move. It just was very strange. It didn't look like a strong move last week, but it was enough. It got over the hump. And so it got over the short-term downtrend. It got over that kind of medium-term downtrend. And then we'd have to look at the big-term creek. And I don't have this one, like I'm not really looking at it very much, but yeah, we had all kinds of ideas here. There it is. So this was the move that we wanted to see right here. So you can see like it's pretty similar to what we might expect, just a little early. And I'm not really worried about timing as much anymore because my timing tends to not be very accurate anyways. Very few people can time stuff like perfectly. So yeah, I mean, this is definitely like a strange kind of a widening that could maybe put a lot of people not at ease, perhaps, because they're like, well, it's a widening, it could still break down. Yeah, but until it does, there's not really much to say about it other than it's following through. If it widens enough to break out, then it could still be very bullish, even if you're thinking, oh, it's going to break down or whatever. So if it were me, I'd be looking right here at, again, 505, maybe 520s, and that lines up, with what we might expect in this region. There's a lot going on up here with triangulation. So, I mean, gosh, there's so many things we went through. We could go through like a number of them. Does a gap up mean that it has to come all the way down and fill the gap? Well, maybe. I mean, you never know. The idea that we make a gap doesn't necessarily mean it has to be filled right away, like that day. It really just depends on volume. And that's like what I said earlier, volume, follow through, and support. I think you're going to really look at those three things, and that's all you really should look at. Because anybody and their grandma could look back here and say, well, there's a gap at, 454. Okay. Well, maybe it ends at 454 this week. Does that kill the move? Not necessarily. I mean, if you go back and you look at this, if it pushes up and then the rest of the week it chopped down, you could look at that one way and say it's terrible. Probably wouldn't be that. If it did just this week, or even into like the 13th or whatever, let's say it just pops and then the 6th it comes back down and fills the gap. Sure, I could look at that and say that's bearish. But, reality is we don't know what's going to happen. And at that point, who knows? If it got there early enough, you could fill the gap and then rally back up above, getting ready for the next week. It's just very difficult to say that it would definitely become bearish. Okay. My thought is if you're already bearish here, you probably are thinking this is just another upthrust. But as a bear, you have to contend with the idea of jumping creeks the opposite way. So if you're a bear here, again, just trying to play the opposite, I always play the devil's advocate, right? If you're a bear here, you're really looking at this and you're saying, well, once it comes back below here, it's confirmed that that's an upthrust. So you'd be waiting for a high volume sell-off. You would be waiting for it basically to drop back through like 464. as a bull, we've been looking at 460s saying we need to jump above 460s. If we get above 460s now, it's a new game. Like that's what I said on, I think Friday or something. Someone would ask about, well, what level we need to get over? What does that look like? And I said very simply, like, I think I said it on Friday when it popped. They said, well, it popped to 460, but it needs to go above it and then hold support. Same thing's true still. I sound like a broken record, but it's because we just haven't made that support yet. You know, it's that simple. If this took longer, like this could go into Friday the 13th and jump up here and, you know, technically like that would still be healthy if it holds. As long as it holds above that creek, you're fine. So this is the biggest jump that we could have made here. And so I want to kind of look at this big chart because I want you guys to remember big picture wise what we were looking at. We looked at all the EMAs. We did some really interesting comparisons to EMAs last time. The big thing I wanted to kind of point out was a lot of the points of contention, like September 13th here at 503, which we're almost back to it again. A lot of that had to do with what we thought was going to be the second move up, like we did in 2020. It's really just a secondary up thrust. It doesn't have to be any follow through really at all. It could just have like a distributive action, you know, after the fact, something like that. And that's generally where I've been coming from for the last 4 or 5 months, was that we might get another big move. It just seems like it's built for it, that you would need to distribute again. It wasn't until recently that we started really looking at low targets like $6, $5.80 rather, and then even lower at like 520s even. If you could hook there, I mean, so on and so forth. There's certainly possibilities that this could still dump. You need to be aware of that. Just because you're up 7.8% doesn't mean it's all ice creams and lollipops or whatever. You got to be careful because it still hasn't jumped that main wave. So I'm still a bit like on the fence, even though we're up high and we've jumped over the level we need to jump over. But I will say this, is when you look back at this level historically, I did it very, very tightly after I made this green line. And that dotted line that you see on my chart is actually more or less like the real 50% line. The reason that I made the green line and kept it is because it hit more of our points locally, like from starting from like June down through September. It really hit a lot more, in my opinion, on this higher green mark. But technically speaking, okay, that dotted line that you see coming down on my chart is actually, if you're watching, is actually more of like the real 50%. And you can see here that we just jumped it. 50% of what, Booksy? It's kind of 50% of the 50%. It's actually like the lower 25% of a massive channel. So if you took the all-time chart and you broke it into a channel going down and you broke it into 4 sections, then right here where we just jumped over, right at like 460 basically, is the lower 25%. So there's a possibility whenever you make that jump, if you can find that support, that you shouldn't say should, but you could end up pushing all the way up to the next one, right? It's very high potential. That's 1080. Well, that's higher than you said. You said 8 something. Well, there's a lot of reasons I said 8 something. 869. I haven't forgotten the number. I'm not going to go into every one of those reasons right now. But in theory, yeah, like that's where you would be. So if I took the same chart right here and like applied it to the upside, I think you'll see what I'm talking about. And even here, this is like kind of off. I think because I used the lower end of the gap. I think I did it like that. So yeah, so it's a little off. But you get what I'm saying? The reason I did it this low is because of the 2020 build. And then what I see as the, that main early creek that was developed way back in 2017 in the bottom. So that's the width. It's like the original opening price to the 2017. That becomes the width of that channel. It later expands, and you can see there's kind of a gap almost in the middle where you'd see that cross happen. So you get the idea. It's not really 25%, like I said. If you were taking that really religiously, you'd be like, that doesn't work. No, it doesn't. But in theory, like that's where it would be. So anyways, you get the idea, okay? So the point here is that in theory, again, you don't necessarily have to make this jump. And that's where a lot of people may be thinking, well, I think we're going to pop all the way up to 21. And we've gone back and forth about this, right? And then you're basically just forming like another January move up here. I don't personally think that's going to happen because of a number of reasons that I probably have gone through. At this point, I've probably gone through them so much that people are like, I really don't care anymore, Booksy. I don't want to hear it anymore. But I genuinely think it's not necessary to do that right now. And I think it's not even about necessity. It's really about timing. I don't think it's timed out right to do that right now. So I still think we're not going to go above, color me wrong if we go the other way, but I don't think we're going to go above like 1380s or something like that until maybe mid 2025. So that's where I'm at right now. Okay. But that being said, this is the waveform as I see it. So I still think that that's not going to happen. That move is not going to happen until, again, maybe summertime. After this, we'll see. Happy to be wrong. If it pops, it pops, guys. I'm like well positioned if it goes to 20. I'm not worried, but conservatively, I just don't think it's going to happen. Okay. So this is sort of where I'm at with my game plan and all that jazz. I don't think we're going to make that move till a little later over here. So in the meantime, I'm really just watching the top of this channel very carefully. And there's a lot of places you could stop. I've made a case for the 8s. Neither here nor there, as they say. Okay. For now, the big hurdle is going to be about $5. So we're coming up to a place where we've dropped off. I just wanted to show you guys the big picture. We're coming to a place where we've dropped off. Potentially this is a 1, 2, 3, 4, a quad flush. Kind of worked out. 1, 2, 3, 4. I don't know. I mean, it's crazy looking, but it definitely looks like a quadruple flush to me. And then it looks like we've got a build out towards a build out towards 5, I would suppose. 505. There's a couple places it could collapse before then, but yeah, I think 5. I want to say it was like 503 or something. It was a weird number, wasn't it? We'll just say 5 because I don't know. Get ridiculous with some of these numbers. That would be a place of contention. 490s is also another one. It's just, I mean, obviously it's like you guys are now like, well, yeah, it's like slightly below. It's where we are now. Well, it is technically like a hook zone. If you look back at the drop off here, this is another one is like right at 490, 490, 491. I got 490 on my chart. This right here. So this is definitely a possibility as well. You can see it right there. Anywhere you drop off the face of, a range, you should definitely mark it off. Now, I had contested that if this were going to slingshot, that would be very, very important. So what I mentioned was that that becomes like a 50-50 in the event of a slingshot. So if this works out, then potentially this has a slingshot to 565 pretty easily. And that should, if you did it right, if it's calculated right, that should give you a really logical zone to go into. And I think it does. It's basically the top. Straightforward, right? Pretty simple. So you can see why that would be very important later on as well, because then you do another 50-50 for that top. And this is how I essentially get my measurements for a potential rally that goes beyond the top. A lot of that's based on, it looks like 760s or something. You could do it from the lower hit here. That's fine as well. You could do it from, again, 490 or 5. The price differences aren't going to be that great. This gives you a higher push to, it looks like, if you did it from the low, 576. That actually makes more sense even, because 576 is like right off the top here. Goes right back to what we saw in July. So it's a really clean measurement. It's just math. And then if you went off of that one, we could go back down here. I need to pull this back down. Potential here is quite good for getting up to near 8. That's like 790s. So that's, again, it's not happened yet. Ideal close for today, just closing above the creek. I just want to close above 465. It's pretty straightforward. I don't really want to drop back below any creek at this point, so it's not good for us to drop that. So there's a couple that I'm looking at. This is one here. It's more like local. This guy gets this one. And then there's another one that's the green line coming down. So again, fairly straightforward. This is actually very easy compared to some other stuff that we've kind of worked on. Because we haven't really had a clean break yet until today. So like a very clean push over both of those has not happened. The closest we came was like the November 13th area where it pushed up and it almost held above on the 15th. You don't want it to go up again and sell off again all the way back down. SEC filing, the company said entered into a series of privately negotiated agreements to retire 24.22 million unsecured debts through 5.75% subordinate notes due 2025 between November 8th and November 12th. Okay. Jim Cramer on AMC. If it gets to 6, I want you to sell it. Period. End of story. On November 12th, the company disclosed a debt retirement move. Yeah. I mean, Kramer's going to Kramer, so he's just trying to, I genuinely don't think the guy's a bad guy. I think he's just trying to help people. I think he probably sees this as it's going to come up over the top and institutions are going to sell it because that's the top of the range. Is he wrong? Maybe. But like for someone to come out and just say, I mean, I guess he shouldn't be telling people what to do necessarily, but like, I think that's kind of market manipulation in my opinion. You know, he doesn't get in trouble for it, I guess, for whatever reason. Maybe he is a financial advisor. I don't know. For him to say like, oh, if it comes up over 597, sell it or whatever, he's really just telling you what you should already know, which is that this is the top of the range. I'm pretty sure if you look at any analyst lately, they've said it's between 4 and 6. So like, I don't know even if it's controversial for him to say something like that. It just sort of is what it is. I don't see it as him being like bad-mouthing of AMC. I mean, he just doesn't have faith in the stock, so that's all there is to it. If I don't think this is going to go, then that's probably what I would say too, is like, hey man, if it hits 6, get out. I'm, you know me, like I'm still very like middle of the road compared to some people. And I feel that there's logical levels of distribution, and that's one of them. Like, make no mistake about it. I don't know which chart it's on anymore, but I definitely have put like concern or something up there at the top. If you guys recall, I was like, yeah, I'm a little concerned about that top level because that's where you could have some issues, you know. I don't know where it went, but I had it right here. So I had on my chart, I must have just hit it. I put up here concern. I mean, it is a concerning area because you get to 6s and that's technically like where a lot of those institutions maybe have averages and you're going to have problems. You know, if people want to sell, that's going to be a big hurdle. I'll say this without knowing the future, and you don't always know what's going to happen. We've had a lot of back and forth about where you maybe stop, and there's been some very low targets. I know that I ran into some around the what was it, like 460s or something like that. Or excuse me, 560s. We hit some that they're quite shallow. They were not big moves. And the truth is if you're just doing a double flush here and you're just trying to sell back down, you could come up to 575 and then flush it back down. And I just want to make a point of this because I think it's important to remember, like, if the goal is to get it down low again and go back and trade shares, you don't need to flush very far to get what I call like the double flush, the 50-50 move. These kind of moves appear all over the place in the market. You go up, then you come down, and then you go to the bottom. We did one back here in September on the 9th, and you can see like the ultimate goal in doing a move like that is usually to drop it beneath a support that you're having trouble getting through. So they drive the price up in order to get people to sell, and then they drive the price back down. They start distributing, then they sell it back through. And this is very typical of all stocks, not just AMC. And the reverse is also true. You drive the price low in order to drive the price high at times. It's not complicated. It's a question of liquidity. So in theory, let's say if your Jim Cramer was right, you went up to 575 and then they wanted to sell back down and try to get low, is that enough to get you to a reasonable level? Yeah, 575 gets you to 3. It's like 301 on the dot. So if it did what we think and it goes to 576, guess what, guys? 576, I'm not trying to like be the bear here. I'm just saying, like, if you're a bear and you don't think it's going to go higher, that's what you're going to look at. And I personally think that, yeah, sure. You could go to 576, distribute, and then look, it goes right back down to $3, like on the dot. And that's where your gap is. So for someone to say like, hey, you should sell, just because he may have a reputation that you don't like, just because you may think he's like, whatever people call him, a shill or something, or anti-AMC, I don't really care about that. I look at that as like, what is he really looking at? I think the best thing you should do is know your enemy. And in the case of AMC, if you're bullish, your quote unquote enemy would be the bear side. So you would be watching to see what would the bears be looking for here. What would a bearish action look like? Obviously, selling back through 460s this week would be kind of bearish. Don't really want to drop back through. If it does, even then, yeah, you could technically still like catch down here. If it ended at like 450 again, it looks not good to me. But technically, yeah, you could catch there and rally again, going into the next week. That's not impossible. It's just would be frustrating to watch. Ideally, it stays above 460s, 467. That would be the easiest for us mentally, emotionally. It would be easier just to watch it, not go back down. Everyone would agree with that. So either of those could be potentially still short-term bullish going into early December. What we talked about scenarios, we talked about a lot of stuff that moved pretty far. We were talking about things moving potentially up to the 8s, potentially up to even 13, although I'm favoring like the 8s more than anything else. We talked about longer term setups where they're more sideways for a longer period of time. I did a series of charts that we looked at bear side and we talked about what would downside maybe look like. And we did a series of charts on downside too. I don't know where that one build out went. I'm sure it's like here somewhere, but one of the last ones we did was probably one of the most unusual, which was a longer term kind of SOS here, which is very strange, I think, because it just wasn't really something I would have thought about necessarily. Like where it's really long term, it goes into more of a sideways where institutions trade this top above 575. there's always an infinite number of possibilities to accomplish much of the same thing. This one was really interesting to me. This was the one we came up with kind of in the end on, you know, I don't remember. We were talking about like a middle of the road kind of thing, and it was one of the more unusual ones that we had found. And this is still one that I think is very possible. You know, it seems a little bonkers, maybe to some, but it's possible. You know, and then we talked about what would that look like on the big picture. You got to remember the big picture, okay? And big picture, there's a conjunction of these markers on December 31st, okay? So regardless of what happens with these kind of 50-50s or whatever, all right? Regardless of whether it does this kind of longer term upward move, it takes forever and everybody's like tired of it again, going into February, it's not moving, yada, 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 or it does like an early move that's really big up front. It doesn't really make a huge difference to me because, like, in the end, if it goes to 869 and it hits that mark, I know what I'm doing. You know, I'm not going to be sitting there waiting for a second rally. I'm just not in my TA. And ultimately, what I really concern myself with is where does this intersect some of these key levels? You know, when we went through and we looked at the 2020 example, we really focused a lot on that 50-50 back down because the idea of an upthrust here, if it happens, would be great short-term rally potential for profit. But at the end of the day, like if it flushes down, what's going to get you to, you know, your goal? And 869 came up as one of the most likely candidates because of the nature of where that breakdown leads you. And it leads you basically back to the gap fill wrapping around kind of the liquid center here at 498.5. So there was a lot of question about how maybe that happens. But at the end of the day, like I was still semi-bearish. And it sounds weird to say it, but because you're like, well, it's going up. I know, but I thought maybe it would go up in order to come back down. And that's a bit different than just saying it's going to dump, right? Like it's pretty different because you're obviously positioning yourself differently. So yeah, I mean, I don't know. Am I happy with today's price movement so far? Yeah, so far so good. Do I think it could be dangerous still? Yeah, it could still be dangerous. I think it would be unwise to assume that it's just going to keep rallying. That's not a smart way to be. So get your markers set up. Make sure that you're aware of what you're going to do. And I don't think that it's good to kind of do the if-then stuff when it comes to like stop losses. Meaning like if it drops down here, that's a pretty important level to break if it breaks 460 again. So like, would I want to hold on to my positions for the hope that it could rally again? I don't know. That's a tough one, you know? Like that might be a little too much. For short-term stuff, no way. I don't think I would. I think I'd probably just get out. I've got one short-term contract for like December. I got a 4-5 in the money for like December 4th or 9th or something. I don't remember. And something like that, right? And I'm looking at that like, you know, that to me is a pretty good position to have right now on a rally day. But if it dumps back down, what am I going to do? Well, I'm probably not going to hold it going into the next week because it'll get crushed. You know what I mean? So it doesn't make sense to think it's going to continue to rally like that. It just wouldn't make any sense. So that's kind of where I'm at. Like, I would be really careful is what I'm trying to say if it comes to fill this gap. Being up 8% is great. Being kind of where we are right now, I think it's a make or break kind of level, a make or break region. I don't see a lot of reason if it doesn't move today or tomorrow above this to like continue to hold short-term positions. If that's something that you're in, I would be very careful. Really, this kind of a rally might be the best. You never know. I mean, it really could end up becoming bigger than this, and you'd be like, well, I missed out. Or it could just be that's the end of this week's rally. Like volume drops off a cliff, and then So which is it, Booksy? Right now, volume is peaking. I mean, it's the highest it's been in this whole area down here. So you take that for what it is. There's probably a lot of selling involved just as there is buying. And that's when we can come to like the short term and we can look at, all right, is it making higher highs on less volume a little bit? Is there another trend that's been left behind? If it starts distributing, what does that look like? Probably have to go pretty short term now to see that. I'm going to go to 6 minute. That's my buddy. What about GME? I mean, it's back in that range again. So just like last week, you know, the expectation was hit that pocket, probably come back to 25. It did that early, and then it rallied again and hit the higher extended targets, which were up near 30.80. It never actually got there, though. It went to like 29.79. That's a previous top. So it hasn't pushed over that previous top yet. But overall, like the TA on this one's been pretty straightforward. My timing on it, you know, obviously looks a little off, but the levels are right, which is good. So I wouldn't be like overly cautious or overly optimistic. Probably just be very like straight in the middle of the line here, because it looks like if it holds, it could just keep rallying. But if it doesn't, then I could see it easily coming back down to that gap. Yeah. MPW is a great example of this because it really looks like it's trying to break out, and you're on the one hand you're like, oh, it looks like it's about to go, you know. And I have some targets that are ridiculous high at this point, like $8, $8.50 for even like going into January here based on an S curve. But at the same time, it's easy enough to look at this and think, well, it could just be like a double up thrust at the end of a sell-off, you know, a UTAD. It's got the same markings as the first. So what's the difference? I don't know. You know, you have to break this line. That's the difference. You got to get back above 470, 467. I mean, it's a really similar number. Like we talked about this before. I think because AMC and they're both small caps and they both are owned by the same companies, they seem to have a lot of the same fibs and supports. I think this is still the most critical level at like 467, just like it was for AMC, which is weird. But yeah, it could easily be like, oh, an up thrust, and then it slides down and hits the lows before it goes. And I'm okay with that. I still think it could go, but yeah. So you're in this weird kind of a place where it feels good to be up. I'm sure it's feeling good for most people. You want continuation, so you want to see volume continue to push in. Keep breaking higher highs. You do not want maybe a lot of divergence. So you could look at short term. I don't even know what that is. That's OBV, I think. So short term is a lot, but where's the RSI? Short term, this looks like it's topping off. It doesn't mean it can't rally further, but it definitely overbought, and then it pushed up and made a lower RSI, so it looks weak. Looks like a cat ear on the RSI. So yeah, it to me it looks like it's going to pull back before going forward, but you know, that's short term, so we'd have to go up to a higher time frame to really see. Let's see. Let's go double that. Let's go to 15. A lot less divergence. It's still there, but a lot less. And then previously, like you can see that even if it pulls back, it could still rally again. I mean, on a 15-minute time frame, there's certainly potential, looking back at what happened on November 12th, that this could be more of a temporary sideways action. It's a lot like what happened here, the double up thrust, and then you kind of go sideways for a bit and then push again, even if there's a divergence. But yeah, I think short term it looked pretty ugly. 30-minute, nothing really to say about 30-minute. There's not enough topping here to really cause any kind of divergence yet, so you wouldn't have one. higher time frame doesn't exist just yet. There's no second top on the higher time frame. It's all one move. Yeah, this really took, looking back again at November 12th to the 13th as an example, that divergence doesn't show up till on the 30 minute till the second top, the bigger second top. So it could take a longer time. Yeah, maybe even a day to show up if there's going to be one. Divergence isn't the only way that stocks turn around. They don't have to have divergences. But typically, like, it appears. And you see that here on AMC quite a bit. Like, there's a rally into a top, it gets overbought, sells back down, rallies again, and the RSI doesn't break out, and then you get this bigger pullback. That's the double flush, right, that you get. That's a huge divergence right there. And I'm on the hourly right now. So, yeah, nothing like that so far. It really looks like almost like a mirror, doesn't it? It's starting to do that symmetry build. Like this move being mirrored out here. So would imply that maybe you have like a backup. Let me check something. Yeah, it would imply that you back up to here and then you try again. And frankly, if you're just doing a symmetry move, you would assume at that point it might fail, but it makes sense. That would be where the rally goes if it does it. So potential here to drop back down to 455 and still fill that gap and then rally again with a cross up. I'm not huge into symmetry because I feel like it's very hit or miss, but if I see like a winding and unwinding, I think it's more important. That's what this looks like to me. So yeah, I could see that. You guys are like, well, then the rest of this is down. So this is gonna go down. I don't know. I don't think it has to last that long. I mean, it could be again that they're using it as an up thrust and to get up above 490s and then sell back down. Sure, you know. I don't think you have to go that deep into it at that point. You just wait until that happens. That's next week anyways. Sure. So it definitely looks like a possibility here that, at least here, that it could come back pretty far. And I'm just being quite literal with this idea of symmetry. But sometimes these formations are pretty straightforward like that. Yeah, it's from the bottom. Seems that way. So this is the build out and the breakup. It looks really close. Though honestly, it doesn't look like it came high enough if it really is going to be symmetrical. It doesn't look like it pushed high enough. It needs to go to like above that top target at 503. So maybe we'll get like a last hurrah and then we'll see some kind of divergence show up. So maybe we'll pull back to like 480. And then push up again. It seems possible. I would personally say it's gone high enough, but I think that maybe because we haven't seen, like for example, in the 30 minute, like we haven't seen it build out yet. There could be like another little push. It's interesting too. See, this is like a gap down from the creek. Isn't that weird? And then this is like a gap up from the creek on the opposite side. Very interesting, right? It's almost as if it was planned. Yeah. And then look at that level. Look at that unwinding right where that gap is. It doesn't seem relevant until you kind of like stare at it for a minute and then you're like, oh, okay. That gap's like in the same spot. Right there. Pretty fascinating. Yeah, I don't know. So we're maybe maybe gonna see a little bit higher. Just based on that alone, I would say that maybe it didn't come up high enough, but it looks so similar, I'm not really sure I care that much. It doesn't come up again. Nah, I think it came up high enough. See, like, right here, these are both wicks right there. And those wicks come up higher, but you see the candle body is actually, so this closed at 473, and then this also opened at 473. So I think that 473 is more important back here, right there. And you can see the wicks, they double wicked right on top of that line right here. So I think that is the extension. I don't know for sure, but it could be enough. So the next action is to sell back down, fill the gap, I guess. I don't know. That's what it looked like. Like that's your rally, and then it's going to give most of it up. Going back. It's interesting. Still, it's good for us because we're above the creeks. So even if it just came right back down, there's no further rally. So maybe we hit here, maybe we don't. Maybe we hit 5, maybe we don't. I think it's enough. It might be enough for us to have a drop now back through to this parallel, which is 454, which is the gap fill, by Tuesday at noon. And then slowly kind of churn back up. I don't think the timing has to be the same. This really would build back up to that same mark. Try it again. This time it could be 5. So in this case, because it's an ascending pattern, if you don't get 5 today, it's not a big deal because you could get 5 later. That could be the Monday move, actually. So Friday, it could land at like 467. Where would it be on Friday? I don't know. Let's measure it out. So this took quite a long time to land here. From the time it hits the peak. So that's Monday. So yeah, it follows. I mean, it's close enough. It's close enough. I think potentially you could do it Monday or Friday, get above 470 again. And that's interesting because that's actually the outer trend that we talked about, that green line. So this would be a backup to fill the creek or to fill that gap, and then you'd have a rally to 480 and then land at like 470 at the end of the week, and then you'd rally again and hit 5 Monday. It's pretty straightforward. It's a slower moving than expected pattern. That's where things can get really interesting because it either holds and it really goes, which is very much in line with the December 4th model of like a pivot point, which we talked about quite a bit. I really don't know where that stuff went, guys. I feel like silly. I think I lost it or something. I don't know where it was. It's just gone. This is the problem when you have too many charts. Too many charts, too many lines. I lost the chart. Oh, geez. Actually, this is pretty close. This is the one. Yeah, this is the one where I went and looked at the early wave. That early wave actually goes up all the way till December 4th at the peak here around 580. So this is the one that I said that I thought it could be lost. I don't know. I rebuilt it, I guess. This is a really messy chart. This is the one I got criticized for that one day. They were like, you don't know what you're looking at. I'm like, well, I do, but I can see why you don't. Now I look at it, I'm like, oh, this is a bad chart. Yeah, this is interesting. This was the early wave, this pink guy. So I said that the smallest wave may have failed because it failed to, right here, hold it. I thought it was going to hold it and go above. It's still using it though. Like it's using it as like a 50-50 to some degree. You can see the supports on it too. It's strange. I don't know. Maybe you can't see that because it's such a bad drawing. Let me do something real quick. I'll copy it and paste it, put it back down here. And then I want the medium wave line as well. That one was pretty good. And I don't really care that much about, yeah, this is the one I put concern. I put concern at 590. We'll leave it at that. We'll just get those on there. Right, so this is important because we had built out the potential for where that might go. That looks pretty good, actually. That's a pretty clean move. Yeah, so this was the shallow wave, and it's not shallow like superficial. It's just shallow like short term. And then there's another one that's, yeah, so it leads up to this high liquidity shelf at 503 and or 495. So I think we were right. When you go back to this one, it looks pretty obvious. Like that's the problem zone. Like 503 down to 495 is the high sell zone, high buy zone. And then that's all we really need to mark off. And then there's a low liquidity above 555. And I had argued a little while ago that you might, again, if you do that long, slower process, you might buy in off this bottom here. So we had developed that on a couple different charts. So it is pushing again. It didn't come very low. See, we're getting there. It just takes time. Honestly, like doing TA, a lot of it's very progress oriented. You kind of watch it, you see what you see, and then see like this right here, this looks really wrong because you're like, well, it didn't come down low. But if you pay attention, you notice it's done that jump early, which means it doesn't need to do it down here. It's not that complicated. And then the main reason I did that was because on the, so again, it's like, was that, as a line drawing, was that wrong? Sure. But in terms of like what's going on, it's exactly what we wanted to have happen. This is not different. It may seem different to you, but, and then I'm looking at it and I'm like, well, we kind of thought about different ways this could jump the creek, where it would break down. It could jump high here, go to 4.5 and then come low, or it could stay up above on this kind of pinkish path. And this is what I thought was going to happen if, I don't know why I did that. Let me just copy it again. I think this is pretty much the same thing that we already talked about, but I like to have it on the chart, so I'm going to get it back. One more time. This is the one that really brought us to the 4th, because there was a pinch point that happened on December 4th where it's like you don't go beyond that point. That was the second comparison we did, which was the comparison to July 2021. There was no extension beyond December 4th. So that was this kind of later scenario of we move out at a later time. potentially by the 4th, and then you're back to where you want to go here. So this is pretty similar. So this is just a lower version of the same thing. I think we were talking about bear side last week again. Yeah, that's pretty much the same thing. So what I'm going to do is get rid of that and just use the dotted lines instead. Hang a second. Well, I would. I'm trying to make it like a simplified version of this chart. So what I'll do is, so this one only goes to 740. So maybe there's a similarity here. I'm just going to do this. It's the same thing, which is good. I mean, you don't necessarily want to come up with 100% different things all the time. More of the same to me is like higher probability. And I'm going to lessen this one so it's not quite as dark. So this is a short-term wave that we could catch on, this orange one. And then this pink, which kind of looks exactly like the other one. Man, Booksy, you got to pick better colors, man. Let's make it green. Green meaning like it's more of like the boosted wave. Fast. It might help us visualize that better. There we go. We already made that jump, so I'm not going to keep that on the chart. I'll keep that one for now. I'll keep this one for now. And that's interesting. That happened. I have an alert on it too, but it didn't trigger. I guess because it gapped up after hours? I don't know. WTO is pushing its head against that wall. It looks a lot like a cat ear right now. You just gotta be careful. If it can get over 34, I think it's gonna run. But man, yeah, ChargePoint pushed. It's at 126. I'm glad I bought it like $1. It don't really matters that much, but it's a good move. You're just trying to make some money. It's always nice. Well, yeah, looks good. So we're at 493 on AMC, 29.22 on GME. It did push again above this resistance at 29.31. It's a pretty good bar here and a decent amount of volume so far for the day. This is a 4-hour chart, so it's looking a lot stronger than it did at the end of last week, which is good. And you would expect that maybe on a Monday. Maybe not a holiday week, but you'd expect it on a Monday. Pretty massive volume on AMC. Again, I don't think the volume itself is enough to confirm anything by itself. You know, you really need to see that support and then continuation, because high volume can turn distributed very quickly. So I think what I did here on this S curve is I used, we don't really need that, it's redundant. I think what I did on this S curve is I used the, let's make this like orange or something. It's like a resistance zone. It really goes all the way down here. So we're kind of sitting right on that now. So on this green line, I guess I don't have the middle for it, so we need that too. So let me get that. Hang on just a second. Yeah, all right. I'm going to assume that I use this breakdown right here on September 13th, because that's where the anchor looks like it is. Because I definitely snapped this one. I use the GAN box to find, sometimes to find these as well. But most of the time for an S curve, if you know where the middle of the curve is and you know where the breakdown is, then you usually can find it. I think that's it. So that was the line of support. This is the weakness right here, back on the like the fifth or whatever, second to fifth, and then this is where the breakdown happens and the hook. So it finally terminated on the 13th into the 16th, which is the day that we talked about, because IWM broke out there. AMC went down instead of up. And we made the case, or I made the case, that that's pretty typical. Like AMC has done that quite a bit in its history, where it does not follow the market and instead it goes down for like liquidity. This is interesting. I feel like it's not very consistent. This is much higher. Oh boy. So which is it, Looksy? Do you favor these bottoms or do you favor these tops? I think I'm going to favor the tops because I think breakdowns are really important. Both are important, but I think I'll favor that top. So, yeah. I mean, it's going to be close either way. It'll be about 580s, 570s, which is consistent with what we saw in the breakout targets on the other chart. We talked about the 50-50s lined up, what that might equal, and we got like 576, right? And we looked at that. I think I deleted it, but it was over here. So it's very consistent from chart to chart, which is good. Two different methods to kind of determine the same thing is always nice. So it looks to me like this hook, if it can break above this lower region, is very highly probably going to go to, yeah, it's going to make that bridge here. I think the guess that I made on this little diagram was probably fairly accurate. So I'm basically just rebuilding the chart but making it cleaner. Yeah. And where does it go to on this first push, I wonder? I'm pretty sure it would push and then it would drop through. I guess you would look at the 50s around this because that's typically how we move if we're going to whip around. Yeah, so that would be like the halfway point. See that? So you're moving around the major wave in like 50-50 intervals. It's really clean. It looks good. I like that word, if you haven't noticed. But anytime it does something like that, it's a really important figure to note. So I may have this slightly off, y'all, because like it seems here that it's quite high, and I've got it really low. So why did I do that? I don't know. I'm going to do a whole nother group for this. I'm going to make an individual group for this because I want to really get this one down now. I'm like interested in getting that down. So, excuse me. ChargePoint's up 9.57%. That's pretty high. AMC's up 8% on the day. GME is 3.9. MPW is 5. And I think IWM is up 2.14%. It's made an all-time high, which is a big deal, huge deal. It has the strength to do that. We got some strengths and weaknesses across the market here. A lot of stuff looks like it could just tail, just chopping right back down, but I don't know where it's going to go. Like some of these are so low. I'm like, well, if it chops down, it's just like dead, like where's it going to go? It's a lot of them have been bleeding out for quite a while, waiting for, I think, the market to kind of finish its reversal period here. So, I'm going to mark this off as November 25th, Thanksgiving week. So that's the wave that I have. I'm going to hide it all now. I'm going to see if this is right. So I'm going to go through here to the middle. Actually, the middle is like way over here. This is on December 30th. Uh-oh. What does that mean, Booksy? Why did I do that? Let me think. I don't like that date. We've broken down on a lot of December 30th dates. I remember December 30th of 2021. That was really bad. That was where we broke down and started heading into January lows, and then we broke down from there and went down into the March build out. It was a long, long way down. And I remember also, I think in December of 2020 was a breakdown area as well. It started bleeding out really bad. So I'm not a big fan of that. I think it's probably just the after rally, the after Santa rally drop that sometimes happens. So probably what I did is I went back and looked at this and determined where I thought the marker should be up at the top. I may have looked at two different setups here. I may have looked at a setup to this top at 575, and then another that comes up to that, whatever that is, 597, 570s. It's like 596. And then this one hits 575, right? Oh, whatever. It's going to be close enough. So I probably looked at two different setups here. And you can see it's like an average between the two. I want to make sure it's right. I don't want to like guess at this, so that's why I decided to break the chart apart. We're still at 490, so still holding up. There was a mild divergence on like this very short term, like 6-minute chart. It looked like it could pull back as low as 480. It only went down to 45. It bounced again. It's trying again to advance up past this 495. I think it could be, again, this idea of like you're kind of trying to trank it back up and sell down before a bigger correction, which would appear on like the 30-minute or something. I don't see how coming down to 454 this week would necessarily be out of the question, though, because this build out is pretty clear. It definitely looks like it could do it and end the week high at like 470s, but this might end up being like where we peak off. I'm going to look for different possibilities here, but right now, my bottom line is I still think this could probably gap fill and still break out here, but it may be a dicey situation going into the end of the week if it starts pulling back down. So we'll see. Right now, what I'm doing is looking at the possibility that it doesn't happen, doesn't follow through on that, and rather it just rallies, because this chart that we looked at is pure symmetry, like very, very straightforward, almost a rotational symmetry at one point, because this gap down happens off this creek and this gap up happens off this creek. It's pretty interesting, but the opposite way, right? But then there's a symmetry to it that's hard to deny, and it looks like there's a possibility it could do that very same thing and get the gap fill. I mean, it's right where it needs to be to come back down Tuesday and get the gap fill and then do the remainder of it. So the rising symmetry on this quadruple flush, 1, 2, 3, 4, does look pretty strong. But there's another possibility, which is that we're actually using more of a waveform wrap, which would be way stronger. Ooh, that GME sell-off was nasty, that wick. Kind of looks like it's struggling here. I want that double top. Anyways, so this was where I was getting at with this, is that technically speaking, if this is an S curve, you could be building out around that S curve in a very simple, straightforward way. So what I'm trying to do is if that's the case, this could be, let's say, for example, you thought that's the case. Well, then in that case, the symmetry isn't really this horizontal push, is it? It's not this, like, slightly diagonal push. It's really a symmetry around what? Well, it would be a symmetry around potentially like this S curve. So if you look at it that way and you see this as like a rising, then it's not as straightforward, because this could technically be like a 50-50 now around an S curve that then comes back down and lands on top of the S curve. That's accurate. you know, if you're looking at it that way. So I'm going to explore that possibility and not just assume that I'm right about the other thing. Though it makes sense, you know, it's very tempered expectation-wise. This could be building out like this is the top. This is the top. So let's take it again quite literally through the motions here. So this is a build along the creek, or rather not the creek, but the S-curve. This is a rejection on that S-curve. And then it comes above 50%, below 50%. Again, it builds out. I mean, this is where you could argue, I suppose, that this could be the bottom of the S-curve here. That's actually lower than expected. Yeah, it's possible, but I don't want to get too deep into that. In which case, we've got to do, man, we've got to do like 3 different ways. I don't like that. But anyways, so that could be that. And then, yeah, you come back down, hit that, and then rally again. That's if the S-curve's like really low. And I think in the case of this longer pattern, that might be the case. That might be a better case to make. That you think this is like low. This would make some sense in that regard, if this is actually lower. I don't know, it's weird though, isn't it? I'm gonna have to do this like 2 different ways. So I'm gonna color this differently. I'm gonna focus on one at a time. It's too much. And this may be a little bit academic because we don't really need to know like every little detail to know that like that a gap fill is possible. And we definitely don't need to know where that it comes down, you know, just to fill that gap by itself. That would be fine. But knowing that that's where the creek is anyways, you're kind of like, all right, so there it is. You know, we've got that on the other chart. It's just, it's in a place that makes sense. So it's like, it doesn't, the rest of this is more just hypothetical about what may occur, you know. So let's see here. So this would have to be way higher. I'm not really a big fan of that one. I think it just looks wrong, but that's where it would be. I'm just using this as like a measurement tool to get it kind of proportional, yeah. So it really would go all the way to the top here. So it may favor these other wicks, these 3 wicks right here, quite a bit. Never mind, I take it back. It looks pretty good. So that's definitely a possibility. You can see right there, 1, 2, 3, 4, all hitting that curve. And even this breakdown and this bottom, that's a pretty strong one. All right, so that's one possibility. In which case, I mean, honestly, it kind of looks like it already did this. So you would look at a 50-50 maybe around the curve here. I mean, it's a pretty big stretch. Really, this 50-50 goes from this top to that top. So you'd look at this as the top. And so you'd say it could potentially go up to 501, which is what we were saying earlier. That's almost the exact same as what we saw here, because this goes to 501. So that current trajectory, this is lining up more with that wide. It seems to be on the path of that wider S-curve. So I think it's a good example. In which case, we haven't quite gotten there. We may not, but we may just not make it, like I said earlier, because it already technically wicked above and yada, yada, yada. But it looks like it would go maybe up to 491. And then potentially come right back down and retest that bottom. This is where things can get kind of interesting because this actually stays above that supposed S-curve mark right here. So it would imply that maybe this doesn't actually come that low. Maybe it doesn't fill the gap, you know. Then it rallies again So a little if-then statement there. Then what? I'm not sure. There's not really a way to measure this off that bounce. But it's an S-curve. So again, if you're following it, the ideas here are really just checking those marks, checking those boxes. So maybe at this point we could just then use those parallels. These would probably accelerate like everything else does. So yeah, maybe this goes up a bit higher. Not much higher, but goes a little bit higher. And the rest is history. This would kind of just represent like an M cross going through, potentially to the upside here. If I were to be a guessing man, I would say that perhaps this is where you get a longer term pullback, and then it rallies again. Again, if it's going to be like super one-to-one. Yeah, it's pretty tight. So the idea would be like back up to maybe 470. This ends up becoming like a big range. So ideally, it doesn't go higher than the previous top there. So I know it sounds weird, but it would actually be better to stay at 4 and build out maybe even into the 13th. And then it could rally again. This looks like it terminates on Friday into Monday, the 17th or the 16th. So it could be one of those things where it kind of rallies a little bit into Friday and then jumps really big Monday. And that would be the completion of the 50-50, like the up, down, up. So you get a little bit of a sideways action from November 29th through December 13th. We're kind of camps underneath 5. And then a potential rally going into, shoot, I mean, it could really be as early as Monday. I'm kind of being like pessimistic, but I frankly think if it comes back enough, you could have it be a spring over here, and that would be enough. And it doesn't need to hit it again. It just needs to jump the creek. So maybe Friday the 6th, it dumps down low. And then it rallies Monday into Tuesday. And this is like a week-long kind of rally event going into Monday. It really wouldn't surprise me that much if something like that happened. There we go. I fixed that. So that's more of like the blue path, I guess. You'd call it like a blue path if you want to call it that way. And then we'll look at the really shallow one. So that follows through. Why did I do that? Pick a color, Booksy. Stick with it. Sure, and that lines up pretty well with expectations of what could happen there. I mean, it's a way of kind of truncating the price movement. There's no reason it couldn't just keep rallying. It certainly is a possibility, but that's the rally there. Now, the lower one is way steeper, and I'm not really sure I could even do that, because it would imply that you just go straight up today. It's like, oh, it just keeps going. I think that would be a better one to use the original move I had, which was over here. Why would I do that? Maybe I should make a 50-50 here from the breakdown to the entry. It's really not that different. It's pretty darn close to the first one we made anyways. Okay. Well, I can't really make that case that it's going to go straight up here, as it's literally like today. A lot of times what I've found is that these kind of pinch points, they do end up popping or having like a bottom. Like they're very much like a pivot point, but it may not be that it just goes straight up all day today and hits that target. That just doesn't seem realistic to me. So I might just kind of eyeball one and see if I can find another, and then we'll come back. I was trying to provide like two, but then I kind of stumbled on an answer. So let's say, well, because the first was like 576, and that does work really well. I don't think it's a slower arc. Right, 484 right now. We've given up some ground. Looks like it's coming back through some supports that it's made. So I'm thinking it's already in that retracement mode that we were kind of expecting because of the divergences. It just seems this is the most likely, but it backs up and then it goes. We have a couple different options there. So one backup goes really far down and stays pretty low this week. The other doesn't go far and actually doesn't come down till later in like a spring. There's two different ways to accomplish the same thing. Doesn't really matter which one you do. As long as it holds above, we shouldn't care that much. So what about this idea that it was shorter term? Look, see, because you really did think at first that this was higher up. I came from something. I think it came from this. Y'all have any big plans for the holiday? Let's go straight up. I mean, that's where it stops. It stops right here, which is today, which doesn't make a huge amount of sense. I had the 4th as well, so that one's not on this chart, and I'm wondering if I should put that one on this chart. So I'm going to do that one as well. That might be the one we need to do. That looks more like what we were kind of looking at a minute ago, the first one. So it's probably not like, I know it looks like I'm doing like two different things, but really they're not, because they're both going through the same center. It may be like that idea of possibility and trajectory, and like there could be some that are met here on a wave and some that are met on the other wave. It's just, I don't think it's that complex sometimes. I genuinely think there's a bit of both, maybe. So if you triangulate it, they both look good. There's just different elements of respect based on which one you're kind of favoring. But I suspect that the reason for that is probably pretty straightforward, which is if there's a continuous movement in a wave pattern, you're going to have like multiple arcs. Like we don't know exactly what it is. Maybe we're not perfect at it, but you would catch pieces of that as you're doing this. You would basically say, well, you know, parts of this are looking pretty darn close. Other parts don't look as close. And I find that to be just sort of the nature of it. Like, I'm not really concerned. It's like shooting at something not in the dark, but just where you're sort of just trying to estimate as best you can. And see, this is interesting because when I do this, the pivots are really different. But that's because I decided to use the same pivot here, which I shouldn't do. I should just again, like make it unique. I think this is it. I think it's a little closer, which does work. So it should be closer in. Man, I don't know. Why is that so far off the top? If you don't know what I'm doing, I'm trying to like just make sure the measurements are the same on either side of the arc. Assuming that I'm using the right line and it's not like a lower line, then I should be able to use the same measurements. But to be honest, like distance from the top should be the same. But to be honest, it kind of looks wrong. Like it's not working out. Like it doesn't even look like we've touched this mark if I do it that way. Very strange. So I can't get it to work. I don't think I'd be able to watch myself do this, by the way. If you guys are watching and you're like, please move it this way. Just move it a little more this way. I'd be like going crazy. Like, oh my gosh, guy. Just do it. I'd be like, I'm so sorry. Like if I had to watch myself do this, I'd be frustrated with myself. Like, why are you doing this? Like, why are you killing us? It just doesn't work. I don't know. I don't know why. Not diversion on 15-minute. Maybe I should use the lower marker for this one. I don't want to do that, but I think it'd be important to have a different perspective. The lower marker doesn't go past 540s. It's the same middle. I'm just curious because it's not working to go to the same target, so I'm going to try something different. So measuring off the bottom would go to like there. Dang, man. This doesn't want to work. I wonder why it has the same end too. Isn't that weird? It has the same ending date. They wouldn't necessarily have to be the same, but they are. So maybe what we're doing without even realizing it is we're mapping out S-curve trajectory paths that lead you back to these markers. And these markers are just like fib fan markers, for example. The middle two are the most contended in my opinion. Like I can't find them to be overly consistent. So we're back to 482. So we had thought maybe 480 for a rebound. I mean, that's correct, but all right, how about this? So that's 30.76. I'm going to do this. 7.5, close enough. That one's really like really good. Look at that. That's the green one. So I just did a crisscross on it. Just flip the like line around. It's pretty solid. And then the other one is lower, 24.48. Which puts it higher on this side. If you don't like this, it's okay. It's not. I'm not really doing anything like too too crazy, really. I'm just trying to measure out an S-curve. The thing about waves is that they're pretty easy to fudge, so you want to be careful. You just want to be careful that you're using the right waves. Yeah, so I think the secondary wave here is designed around this support here, and then the first one is designed around the first support here. So I do think there's two waves. I think one is built around the top, in which case, why should you not just use that? If you're really convinced that that's the case, then you should be using a different top for this top. Yes, you should. Ah, yeah, and there it is. That's crazy. What? What? Okay, all right. I get it now. Because what's crazy? It's crazy because it intersects right where the other one intersects. It's like, it is exactly where it should be. I think I was right. Okay. So, there he is again, stroking his own ego. No, but seriously, like, look at the intersection now, and you'll see what I'm talking about. I took the line and put it on the right spot. There it is. It's right there. It's on the second intersection point. It's right exactly where you expect it to be, and it goes back to this top. So I was wrong to measure from the same top. Instead, I should have been measuring from the second top. That's why this didn't work. I could not figure out why it was not working. Now I've got it. So now I'm going to do that. That should change things. Yes, it does, because this puts it further out. I was like wondering why it was the same time. Like everything was like wrong. So what we might just do is just stick it like square on the middle of that intersection. And that way we're kind of being consistent. This intersection's not quite right, which is fascinating. I wonder if I picked the right line after all. That made it look right, but where's the hook? It should be up here. So let's see. 21.43. This is not working. That's 23.09. So it's weird because I found the second one right on, but I can't get the first one back. Oh geez. Why is that so perfect and the other one's not? 34, 32, 05. I mean, that looks pretty good too. All right, well, let's think about what you did here. Why did you pick this one? Pick this one because it hits the bottom here, which I know. And it hits the hook here, which makes sense because it's a breakdown point. So why can't you identify the hook on the other one? It should be easier. It's like the bigger move. This is silly. $482, $29.02 on GME. Well, to be honest, this orange one's starting to look a lot more appealing to me because of the consistency, at least, that I'm finding is here. It is angled upward. That's a really strong one. And then finding that the green cross on this wave is not quite as good. I just can't quite identify it. So 31.6, 31.6. It's in the wrong spot. Like it doesn't attach to anything. And if I go steeper here, it misses all the points. And if I go steeper here, it takes off that way. Because this will make it shallower. This makes it steeper. Stop snapping it for a minute. It's 29.2. $26.16. I'm just like, if you hear me rambling off numbers, I'm just trying to find the kind of trying to find like a sweet spot. That might be it. It's not the prettiest. It does work pretty well here though for like a false breakout. It looks to me like none of these are on point. It's like jumbled mess. I wonder why that one's so perfect. The other one's just not. I don't know. 23.88. That's pretty close. That's 23.95 and that's 23.88. So I think we're just gonna call that the middle. And it's still where we think it should be, which is around mid-September. So I don't think there's a better one here. And frankly, this could be a pivot that represents, again, like a mid-low point. So I don't think there's gonna be a better one. It's pretty close to what we had the first time, which is good. We don't have to adjust too much. So kind of ignoring the tops now, I'm going to look at where these boxes actually go and they intersect the middles. So this should fix the problem that I was having before. So both waves start at the same place, but they don't actually end at the same place. But they're more consistent. This goes to 603. This goes to 564. Now they're built on the same wave trajectories, which is important. May not be that important to you, but it's important to me to get it right. Because I don't like being like super biased about something if I can avoid it. So if I put it in the wrong spot, then it ends up being like a problem. Okay, good. That's right. Now I got it. So see, now everything's clicking because like now it looks like it's in the right spot here on the wave. It didn't really look like it was right before. Now it looks like it's right where it should be on that wave. Pushing against it. There we go. All right, we're about done with this. Good. So that green wave is correct. Now the orange wave. Again, the middle's off, so let's just see if we can get this one right. We'll go from there. I like this. I like this chop right through here. It really looks like it is holding that wave. Like it definitely feels like it's part of the bigger structure, which is good. That's the kind of stuff I want to look for because otherwise you're just kind of guessing. Could be the same. But it's a wider move, so it's going to go farther this way. So then this guy should not be here in line with that. It should be out. Now I'm going to play this silly game again of back and forth. That's correct. Good. All right. I mean, that's as perfect as it's going to get. I'm going to get rid of these. It seems a little weird, but I actually think that's right. You're like, but they don't end in the same spot. So how do you know? I don't think they're supposed to. I think one is going to take you back to a particular high, like above here, and the other is really aiming to take you back to the second area here. So there's no, maybe there's no perfection in that, but there's a sense of continuity there for me, because I'm like, yeah, the idea is the same. You're going back up to check a supply. So the lower wave really is checking a lower supply. Both end up potentially being correct in the end. Like you could end up, both of these could end up being right. You could hit both waves in the right spot even, and that could be how it times out. We don't really know going into the 13th of January what it's going to look like exactly. But this is definitely a possibility. And it may be that some of these are used at some point in lieu of others. The other thing we can do, and I don't love it, but the other thing we can do is we can do a rotational symmetry on this, just for the maybe for the green side. I don't love this because usually it messes up when I mirror and flip it. Yeah. It's not very helpful, is it? I don't think that's right. So what I would do is take this and just kind of keep it simple. So if the main motion is this cat ear kind of motion, and you're doing a rotational symmetry around the center, which is this guy, then you're going to rotate that form around I'm going to do it like eyeballing it, and then I'm going to go back and it doesn't look pretty, does it? That's wrong. Maybe because the middle line is wrong, because the middle line should be like halfway through here, not the other way. That's why it looks weird. So this comes through here, rotates out, and pushes down, in theory. I don't like rotation here. It's not going to work. I mean, it kind of is doing that because you can see like it's widening right here. So it does kind of imply you might be doing something similar. But the problem with that is that you have to use like the low point down here. I'm going to fix it in a second. You have to use this as the rotation. So you'd see this as like, this is one move here to rotate up, like across. Which doesn't look completely wrong. It's just not. It definitely would make it seem like the next action would be just to coast down. And then, I don't even know. Like from there, it's just silly. We haven't even gotten over this mark yet. It would look like that, like this, which is, again, kind of difficult to draw out. So I don't really like that. Maybe that's what happens, but it doesn't really make sense. I'm not going to use rotational symmetry here. It's going to waste a bunch of time. The wave is already rotating. You're just debating whether or not the middle is the middle that you think. And there certainly is another possible middle, which is low, like really low, and that's this guy. And that's already the one that we were kind of looking at before. That was way earlier. It's even less appealing. Should go right through that mark. So I'm not going to measure it out, but maybe a little bit. Yeah, it's like there. Last trajectory. So that one's real low. Even in the midst of this, like, I think some of these might be used and some may not, but even in the midst of this, it's like you can kind of see the way that the market generates like momentum. I always find that to be interesting. Like if it checks on one and then goes from one to the other. And in the end, look at where the volatility is. You can see the volatility clumped around this top here, these three, when it's like a really high spacing there, like the distance between them is great. And then look at the volatility here on the peaks, or the valleys, I should say, rather, of this, where the volatility is. It's very similar, you know. So in some ways, this could bode well if you're just expecting it to kind of revisit each of these in fashion, because once the volatility here ceased, yeah, it does go lower and make a lower low here. That's something to consider. But on the whole, you would say that the direction was this direction, you know. So whether or not you're following one or the other, we are right about direction-wise, I think, the need to come back up. And this is sensible because of the thing about the hook, and all of these could be potential hook lines. So you have a lot of interesting possibility here in this drive up, regardless of exactly how it happens. That should be the primary direction. So I find that to be kind of cool. You look at a helicopter view like that and you see the overall wave now, and it does seem very obvious that like these are the three bottoms and you're getting that volatility here. And it's ultimately like very validating for the idea of A, rotational symmetry, B, like sine wave theory. This quadruple flush is a 1, 2, 3, 4, and this is a 1, 2, 3, 4, and it's around the same markers. So like, again, it's maybe there's a sense of frustration that we're having, but largely it's developing much the same way off this bottom. Yeah. It's pretty fascinating. So this is a quad flush right here. And then this is the same exact motion almost in theory right there. So flushing out at the top, starting distribution down, flushing out the bottom, hopefully to start a move back up to accumulate. That's pretty cool, isn't it? If you say so, Buxty. If you say so. Oh, I do. I say so. That's what I think. Yeah. So, this is actually kind of neat. This is a neat way to do it. I don't think I've ever parsed it out quite like this. What that could do for us, potentially, is give us a series of trajectories, which I find to be quite helpful. That's pretty amazing. Those are all the main levels that were picked out on the way down. I like this chart. This is cool. Yeah, weird, right? Boom, 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 boom. Same deal, dude. It's super strange. 1, 2, 3, 4. 1, 2, 3, 4. Or 1, 2, 3. Or 1, 2, 3, 4, if you go that way. Depending on how you want to pivot it. But what we might be able to do is develop really interesting speed lines off this bottom. This is cool, dude. What a good TA session. This has ended up being pretty good. Waveform trajectories off the bottom. Check that out. It's neat. How would you do that in reverse, I wonder? I don't know. I'm not sure there is a way to do it in reverse. There must be, right? There had to be some way. Like if you did this in reverse, where would you go? This is easy because we have the end, but this doesn't have the end. It goes the other way. Yeah, I don't know. It's neat. Maybe you can't do it in reverse because it technically doesn't. It's like 3D too. It's really cool. It technically doesn't like it looks like a flag if you look at it for a minute. It doesn't have a reverse because it's not projecting in reverse, so it doesn't make sense to do it that way. I guess I was just thinking about downside. I guess you just do what I did here, but you do it off the bottom, but I don't know where you'd pick your lines. I have no clue. I suppose you do kind of what I did, but you'd use different pivots. Yeah, I don't know. It's weird. It certainly looks a lot like what we just experienced, doesn't it? This little motion right here. That double bottom, though, is stronger than this. That happened right here. That's crazy. That's crazy. There's a little bit of weakness in it. See, these drives are coming really low. And these push-ups are not going that high. They're not coming above this main barrier here, like this first barrier. There's a little bit of weakness in this. You could identify. Possibilities. So what I'm going to do now is I'm just going to look at the high here, and well, because the last thing I wanted to do was try to measure out where I think it goes. So that only follows the green, this one. So this move down here, only, this whole move is one continuation downward, only follows the green. So unless we make a lower low, green still looks like a highly probable one. So that's the big motion after the secondary push. It's right on it, right on the nose. I still think green is probably the most likely, but it's good to have the others in mind as well. So if you're kind of maybe a little lost by this, it's not that different than everything else we talk about with like S-curves and waves and junk. Because what we usually do in our formations is we talk about the top, which is more of a distributive action. We talk about those cat ears building out, and there's usually like a developed kind of upward motion to that wave, and then you come down and you build out, potentially, if it's healthy, you build out kind of a reverse of that motion, which is your spring. So it doesn't have to be there, it could be an LPS, and then you go up. If it breaks above here, which is kind of where we are now, like that's what you want to see happen, right? If it can break above that, this is almost everything we always talk about, really is. And then if it can break above that, you want to see it return. There's usually a hit that's hit on the top here. Sometimes it can go higher than the previous high. Sometimes it goes lower than the previous high. It really just depends on the setup. If it's positioned low, it doesn't really mean much. It could be that it's going to do like a weaker action. This happened to us a couple times on AMC. And then it kind of does the same thing again if it's distributive, and then it could actually come down quite far. And potentially it could be a spring, or it could potentially just be a distribution, right? But because you've crossed up, really just thinking about it like a wave, this is why I wonder if this widening ends up being very similar here. We've already sort of done that. We sort of backed up and checked them all, didn't we? We did it like a lot here. Chopped all along that area. It would be hard to argue that this needs to have some kind of massive pullback to it, because we've already done so much right along it. Like a ton of trading right here. That this potentially could come up above, and that's where you get those bigger moves. It's hard to say. It's just the natural waveform that we always talk about, though. If I go back and I look at that master fractal that I looked at found years ago now, 3 years ago now, it's pretty much the same thing. What happened is that it pushed up. It goes pretty high. It goes to like the max extreme here, as high as you could possibly make it. Maybe you would say it was like this marker or something. And then it comes back down and it builds out back to kind of the drop-in value, which would be like 485 or something. This is for an example. So it becomes like a SOS with a backup, and then it goes, and that's essentially what that master fractal looks like. It's the same thing, and it's just a waveform analysis. And at the end of the day, you're just jumping over a creek that's established here, and then you're also typically, though not always, you're also coming back to like a center liquidity marker to check that out as well. So this is like your basic structure for quite a bit of the market. And I didn't want to like bring this up on this stream today necessarily, but in theory, this is actually really, really close. Some of you might find this to be kind of interesting. Some of you might not, but I went and did the same thing with MPW. I rebuilt the chart a couple times. I talked about that recently. I went back and I looked at that master fractal, and I want you guys to see something because you're going to be like, oh my gosh, what the heck? I really think you're going to be quite surprised. The people that are out there, there's a lot of people out there that do fractal stuff, right? And they're often telling you that they have like the answer, you know. And they're saying like they know exactly how it works, and it's like this mystical thing. And I've kind of contested for a long time now that I don't think it's what we thought it was, is like this sequence of complicated A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P kind of stuff. But it's really just a simple like 3 steps. I mean, it's really just a wave, and it's the way the waves build out, and that's easy enough to follow. And when I looked at this the other day, I was genuinely like shocked at how almost 1-to-1 it is now with what I saw on MPW, and it just reminded me of like that's a consistency that you can have in the market that you don't have to pay for. It's pretty much always exactly the same. Like this build out is like essentially like identical. So fractal comparisons are somewhat obnoxious at times, but if you just look at it, like it's building out a prelim support, and then it drops low, and then it builds back up, goes up high to check above the prelim support in that wave. It's an auto reaction phase, and then it comes down low. It dips into low liquidity back below prelim support, which is what happens right here in this wave down. Then you push back up again, you test highs. This makes a slightly higher high. And when you look at the build out here, I know it's confusing because I make a lot of lines and junk on my chart. It may be a little confusing, but notice the nature of this, just like an M cross down low between these two peaks. It's identical. Like it's just the cross between the two peaks. That's the build out that tries to push low, and then it builds back out, jumps the creek, which does happen right here. And then all this does is it comes back down along the creek and checks liquidity as it heads back towards ultimately like that prelim, and see where it can go. Now there's weakness here in some ways because on MPW it's clearly like plunging beneath that preliminary support quite a bit, but there's a higher preliminary support as well that's not really being pushed as much, and that's the $4 mark. And that's the one that ends up kind of here giving me a lot of like, whoa, that's kind of crazy, you know, like they built almost everything around this first range. So you build out, now you're trading across that liquidity, you're coming back down. It's literally just, again, it's almost scary, especially this area right here, how almost 1-to-1 it is. If you're big into like fractals and stuff, you would be staring at this being like, what? It's pretty much the same. And piece to piece, like it's freaky how similar it is. I think when we talk about algorithms, this is exactly what I'm saying. Like this little M cross here, right here in the beginning, this little M cross in the beginning, the up thrust and then the hook and drop, the up thrust and then the hook and drop. I mean, it's all the same. The rebound and then the lower wave here to build up to a high, the rebound, the lower wave to build up to a high, and then the breakdown phase going into a series of cat ear S-curve type drops. Right here, there's just an S-curve down, there's just an S-curve down. The lower M cross down bottom, testing liquidity, goes back up, even tests like the same levels here. It's coming back to 497, just like this is the breakdown levels that occurred back here. When people say algorithmic trading, this is what I think about. It's just the nature of like what's being tested in what order can often be very, very, very similar, right? And then the breakout may not look the same, but even like the way this breaks out, like it pushes up, it comes back and like flattens out, and then there's this huge bar up. It's the same thing here. It's like pushes up, flattens out, and then this huge bar up. the top here, look at the pattern of the wave shrinking down into a hook, and this does the same thing. It shrinks down until it hooks, and you drop low. This is where things get really jumbled because it looks like it's not doing anything. It looks like it's stuck in like this, what I would call like a Mark 8 area where it hasn't broken out yet. But I started staring at it a lot, and I was like, it may be that it already did do that. It already went up into this Mark 9 here, and it's building out between the two now, and this is like a cat ear. Because if the desire is not to take it up too fast, really all that remains here at the end is just, you're just trying to sell back down. Really the point of this is not necessarily to go up high again, though you might. The main point of this is to try to sell back down to this kind of liquidity level that was frequently tested along the center. So I went back and I looked at MPW again just to kind of check out. I was like, that's really bizarre. I don't know. I haven't done that in a while, so I thought it'd be good to do. And you can see like that's where it's at. It's trying to trade this across this liquidity, heavy liquidity, and they had some down here at 450s. It just wasn't traveled very much. So it may make perfect sense, in the end, that this doesn't need to come as high. I'm not saying it has to be bullish in the end, but another thing that struck me was the head and shoulder. So whenever I look at these, I talk about winding and unwinding, and I look at head and shoulder structures quite a bit because this has a very even keel head and shoulder structure. If you pay attention, you can see these are basically just shoulders on this kind of rising head and shoulder structure. Why? Because it's essentially mirroring out what this low was as it's coming down. I think there is a nature of buying and selling that's happening there that's essentially unwinding some of those positions in order to selling some of these buy-in positions, buy here, sell here. It almost generates a rotation back to the same point, right? We buy up to the line, then we sell back down to the line. You can see like it's not as complicated as you think it is. If you just kind of look at those marks, like look at this mark right here and notice like this is the sell down and then this is like the buy up. And like look at this mark right here and look at the buy up and look at the sell down. It's going back to the same levels. Like it's literally exactly as you would think I was saying. It's like an unwinding. It's almost perfect. So like this marker on the forward looks like, oh, it looks mirrored. It looks like a head and shoulder. But then you look at it in reverse and you're like, what the heck, dude? It's basically just, they're just unwinding these positions, I think, to go back and get that buy-in and try to get the sell downs. It's quite amazing. So there's a rotational symmetry in there just as well. I mean, it's very, very convincing to me anyways. So when I started looking at this like 2 years, this is December 12th or 13th of 2021. I started looking at this years ago. Like everything just kind of falls into place. You stare at it for a while. But that for me is just such a big deal. Like this motion. So anytime I see that on the right side after it's made that high, I'm like, oh, maybe I should go back and look at the nature of this, because these checks that are being made, I think, are unwinding checks. So you go back and you look at that and you can see like there's an issue with that in this particular example, which is that they're not exactly coming back, are they? Like it would make more sense for this to be higher, which again, that's self-explanatory, because if you had looked at this as if it's going to be a head and shoulder, you'd basically say, well, it should be, and I already have it marked off, it should be finished by like December 20th. These shoulders aren't coming up high enough, They're not really measuring out right. You would expect this to have been, maybe that was this shoulder here, but then where's the last one, right? It's not coming up. I don't know what that means exactly. Maybe it means it's not going to break out. Maybe this is an example of a distributive action, and we're going to learn that that means that it doesn't break out. But I find that to be really fascinating, because the ups and downs are in the right place. So it's a question of liquidity. Are they going to get the right liquidity, et cetera, et cetera. So in this particular example, it's super nice because it comes back, checks the same levels, right? And these markers are tested They were also on a big rise here, like kind of straight up. So this is positioned very high and ultimately doesn't break through this creek. And that's kind of where I'm at now, is like, well, I don't know if I care that much if this comes low, as long as it doesn't break this creek. And this creek is very steep. So unlike the example, which is kind of 1-to-1, makes it super easy. This one, it's not, right? I don't really care if it doesn't maybe hit those markers perfectly. What I care more about is whether or not this is an unwinding, and it is coming back to similar levels on this rise as I've got here. And if it ultimately holds and doesn't break through this creek, I think it could still be healthy and in good shape to run. When I went back and looked at the overall picture of what that would mean, it implied that there would be a potential for this to even go up to 850s. Even though it seemed like that wasn't possible, the more I started staring at it, the more I was like, well, it seems ridiculous, because previously I thought this might come down really low, right? It builds out and then it would drop low. But if it holds here and it can hold above, it can come down to like 387. That's fine. I think it's going to pop and potentially go all the way up to 850. I genuinely think that's what's going to happen here. Like, I think it's forming out like a massive unwinding of positions, and then it would just go back up. Pretty wild. You can't really do the same thing with AMC, unfortunately, because if you tried to, you'd find that it's missing that push out. Like, it either hasn't happened or it didn't happen, and it would be really difficult. We could do it here locally, but I don't think we would discover anything new. And then big picture wise, you might say, well, could you do it like there maybe, if this is like the wave? Maybe. I haven't even really tried. I don't love that idea because it's confusing. Like, where is this in the whole scheme of things? That's the problem with fractals, is that you start looking at the scheme of things. You start thinking it's smaller or bigger than it really is, and so on and so forth. But I suppose if I were doing this macro picture, it probably wouldn't be that different, you know. My expectation would be that this is the build out we just experienced, and that we're crossing the creek low right now. It's pretty much exactly as it's pictured right now on the screen, almost 1-to-1. But this is already what we're doing, right? Like, we're trying to anticipate where this goes if it pushes up to the upside. And we've got these waveforms going up. This is where a lot of this stuff stemmed from. This kind of weird early Booksy research stuff, right? So the goal would be twofold. So like one, the goal would be to you don't come back below maybe this high here, right? So if you do end up making a big push up, and we end up getting up to like $6 or something, it may be, again, one of those situations where you're like, oh, crud, well, it could come crashing back down then. Yeah, it could. We've already talked about that. It could come up, fail, and then drop, in which case this is like a big double top cat ear, right? It doesn't actually build out and go up. Totally possible. This would also look like the middle of any two cat ears, by the way, because this is just a small bottom. Like, it's a few weeks in December, a couple weeks, not even in December 2021. It's just an example that's a simple example. This is a bullish example, though. This isn't a top. This is a bottom. The same kind of patterning happens on tops. So you have to be really careful and know the difference, because obviously one's accumulation, one's distribution. But in theory, there's a similarity in the concepts, right? And so we look at this as like a wave up, and then it creates a downward motion. It's very flat in our case. And then the goal, perhaps, one of the goals might be to, if you're going to go up, to ultimately get above this distribution zone back here, which again, really similar. I mean, I'm not going to say it's 1-to-1, but it's pretty much the same motif, right? You can see the drive low early on, and then it rebounds. It just generates a distribution with a hook. It's almost identical, you know. And then ultimately, like, if you're going to leave, what you would want to see is that you build out a support here before you break up, which is kind of what we're doing. So this is where the creek cross happens. There's the M down low. That's where you would say this is right now, the quad flush, 1, 2, 3, 4. Why do I say that all the time? Because I'm looking for the M shape. And then you see that on the top too, the 1, 2, 3, 4. It's kind of ugly here. It's like 1, 2, 3, 4. It's really just an M shape, but it tends to be very dramatic. So I call it a flush because when it gets ready to go, it's pretty dramatic. And then, yeah, you'd be looking at how did this build out? Maybe it's the same. In which case, you're really just looking for a break up high, pushing to new highs potentially. Technically, doesn't have to come above this high. It has to come above this high. So technically, it doesn't have to come up even to 6. It can come up to like 567. It's just an SOS, right, for us. And then it backs up to the creek. The issue maybe with how slow this is it looks kind of weak. Like it may not have the gusto to push high. I would just urge you guys to remember what happened back here because this is the moment where the first push happened and it's this like massive push up, right? And then it builds out a range in the middle, you know, more reasonably perhaps up to 6. And then it kind of distributes down. You would push back up to try to get back to 6s and see what happens. And I think that's where maybe this could go a little bit crazy. Telling you, this is that top that we'd be looking for later on. There's a lot of potential. We're kind of sitting on it right now. It makes sense because if we jumped like back here on this example, for example, I know this is a really ugly chart, but for example, if you went back through this and you were trying to kind of pick it apart and make it more of a one-to-one thing, you would say this is the center liquidity and that pretty much everything is just anchored around that, right? And it's really established early on as this prelim support builds out before the final drop. It's established early on here. And that rally goes a little crazy, but then it comes back down and it builds out. And ultimately, if you're going to eventually continue, you'd want to be on top of that. Well, we're kind of at that point right now. If you look at the chart, look at where we are money-wise. We're at 478. Check out where that is back here on this prelim supply drop or support drop. That's back here. It's right where you would expect it to be. And we had talked about 485 quite a bit. So this isn't like, again, this isn't some like brand new idea. It's pretty consistent with what we've talked about like the whole time, which is eventually you're going to come back to, and honestly, maybe it's 478. It looks pretty solid right there. You're going to come back to this middle level, which was established in this kind of early drop. I kept calling it an LSPY, but it was concepted also from right here. Like we talked about this being like the place you come back to and test. And then we did this on the bigger picture, like the very same thing on the macro, you know, big picture analysis, which is technically up here on the big picture at like 480s. And I also made a point that that's where the institutions announced their short positions, or at least Vanguard did. And I've said that way too many times, but they announced their short positions right here, and then they announced them again right here. And there's two major gaps after each announcement. It's like they're telling everybody else. I don't know why they would do that, but it's almost like they're announcing like the importance of this region from like 487 to 477. I think those are institutional sign points personally. I don't think it's that complicated. You can see the markers there and what they would represent for like supply and demand. You know, it's pretty simple. And then look at where we broke down later. Like again, it's not even that really that complex. It's essentially like the anchor of the range. So if we were using those as like markers to help define what might happen on AMC, we would see that as this area right here, right? We just did it on this little chart over here. Maybe just like red line. this little diagram, right? It's like the same thing. So right now we're pushing up against it. If you get a push above it and you hold above it, you should push all the way back to near the top. Like you should start exploring these upper supply zones. That's exactly what you would want to expect to see. It's like just push right to 565 or 590s. Because that would be like exactly where you should go in that wave. And again, it's just a breakdown of like wave analytics and what happens. So even though, you know, again, I know people don't necessarily don't love MPW like I do as a chart. I think it's a great chart. I think it's one of the easier charts to read for examples for these kinds of things. So this also supports the idea of another top that could be higher. This isn't significantly higher. It's not, but it's a decent one. There's another kind of weird example here, and I guess I've got a line drawn that way anyways. If you look back, there's a particular trajectory from like early on that is used, and they're kind of met in the same way. These would be uptrend trajectories. So this trajectory that's built out, and I don't have this chart anymore like super clean. These would have been the bullish trajectories from early on back here, and we talked about that quite a bit, maybe in other streams, that like there's always like a bull trajectory. So that would have been like back here. I'll make it big and white. And this is what's repeatedly checked. So if you go back and you look at that, that is a very likely place that you're going to come back to on that second test as well, because you're testing the theory that we could go up. You're testing that in correlation with maybe some other markers that appear here. That's a really obvious one. How do we find that in our local time frame? That might be a little trickier. You know, this is a very delicate kind of pinpoint operation. You have to pick the right marks. And ultimately, it's easier in retrospect, because in retrospect, you're like, well, it hit there, so you know where it goes. Well, you can see it, so you have to be able to like work within that and identify maybe where it goes. I think these two hooks are probably pretty good. Like there's one right here. And I'm gonna have to move this around a little bit. There's one right here and there's one right here. And those are supply drops. And ultimately, like they do help point to kind of where it's gonna go. There's a slightly higher one, which are the resistance, the last known resistance here and here. It's again a parallel. You can see I just pulled it up. And those also help define. So we probably could do something like that right now. If you look at that supply drop here and you look at the supply drop here, that should give you an idea of where it may be going potentially. And I think we've done this before. I don't know. I feel like we have. I feel like we've already done this. Yeah, it's selling off above that mark here. So that's distribution at the top. It may not give us an answer that we're super thrilled about, but it's certainly a way we could go through and use this to our advantage. You guys are like, oh no, Jim Cramer was right. He's going to sell down. He's going to sell down. Maybe. Yeah, this is a really powerful one right here. I think this one's really strong. You guys are like, Jim Cramer's right. He might be. I told you, you don't mess with him, dude. Yeah, I mean, that looks really good. You're like, I can't tell, Booksy. Maybe it does. I can't see anything on your chart. It doesn't mean it couldn't continue. And I know we've talked about eights quite a bit, but it is important to note, like, the difference in what we're talking about here is minutia, because we're really talking about a possible sell down when it hits a certain level. It might go above it, and if we use just this as an example and say that, well, we think it's going to do this, then come down and back up, we'd probably be looking at this as a guidepost for where that might go, but this does ultimately come above it, right? It comes above it right here quite a bit. And that's why I said you could take that same idea and apply it to the next drop, and it kind of looks more correct. So there's a sort of a parallel Maybe you could bracket out an area. And that's a very conservative estimation of maybe where it goes. So I'm liking the way this is looking right now. I think it looks pretty good. Well, look at that. Right up there to $6. So that's interesting because that's after the quad flush, but it's not any of our the X curves we use. It's more like this guy. But it does match. So that would be the price that you broke down here in the wave down. Yeah, I think so. That's the push. Support, drop, top. So the concept here is, again, you could come potentially higher than that. Maybe up to here or even up to there. Thinking after hours this probably went higher. Extended hours. Let's take that and run with it. Let's see what we can do here. I mean, that looks really good. Right up to 6. Yep, there's the next level. That's like 630. That makes sense. And then there's the next one. Quite a bit higher. And the last one maybe right here. Looks like the 18th. It's pretty much like what we thought on the other. So, and that potentially comes up above 6 or right at 6. So then what? Well, then it's just SOS or not. So if, let's say if your Kramers are right, then it comes back down. Potentially, it's not really high enough to come to do the breakout right away. It could come back down to this wave level here where it crossed up and over, which is really low. It's all the way back to like 429. Kind of makes sense though, doesn't it? If you look at where that is. I don't really want to think about that, but how do you get low? I don't know how you would even get back down. So in theory, this comes up if it does the same thing, and it just generates like a distribution. But I don't know where you would go. Like, it would have to come down pretty fast. Usually this comes really low. It's just positioned very low, so I think it would have to walk back through all these levels again. Well, maybe that's where we get those. It's ugly. That's ugly, man. Maybe that's where we get those. Yeah, it's really far. We may have not made the actual M yet. This is a very ugly looking thing. So it seems like it would be kind of anemic. So it would chop across here. It wouldn't necessarily stop right there. That would just be the area it would distribute along if it distributes that mark, that lower beam. So it might hit the higher one in this scenario. Could go pretty high. It could go up to like sixes, upper sixes. And then it would come back. We really don't know. It could fly, because if it's like this and it gets unleashed, it's just going to push up and then dump back down. You can kind of do the same thing if it goes to like eights. That's the thing about this, is like you could easily go up to like the same marker and then generate like a simple pullback, just like they did here, this massive push up and drop. So it's going to be ugly if it does that, but yeah, and then you anchor it around the same markers. So this would do like this. Now I'm curious. What's 869 through these middles? Interesting. Yeah, it's pretty similar. And then, yeah, I mean, the rest of this just is what it is. If it holds, it would have to come back down and hold above this mark here at 482. So 482, 485 ends up being the magic mark, I suppose, if it does hold. I don't know how it gets there, though. It would be some kind of long-winded something. Yeah, this is starting to look a lot like that late scenario we talked about. Oh no. What if all of these are used in that breakdown? And it comes back down to fill the gap. Oh no. It's just like March. It's the same. Oh boy. Yeah, that's ugly. Huh. Yeah, this reminds me a lot of what happened in March. There's like this really nasty sell-through. Back to the creek. What if it doesn't need to go? It goes back to the creek. It's in the right spot. Ah, geez. I wish I wasn't right, but I might be right. Well, I hope it hits 870. At the very least, it gives us some hope of continuation here. Goodness gracious. That's interesting, because it doesn't actually come back down all the way. Where does that go to? 360s, huh? Maybe it's aiming for that 350 area. Ooh, look at that intersection there. Ooh. Yep. January starts pushing, and then it drops off, going into February. Somehow dumps into earnings. Meets all those waves. I kind of like it. I mean, it's ugly, but it actually makes sense. At the very least, it looks a lot like what we've talked about before. The secondary push-up. Now let's take a look at this on the big picture, because I know I added some stuff here. I'm going to remove the ones that are not relevant to what we're talking about. Not as relevant. we got to bring back the we got to bring back that big one. I'm going to come back and bring that big green line back. Actually, let's do this. Let's get the wave here. I'm going to have to wrap it up here in a minute. But I want to finish this chart. Oh gosh, it's interesting. Wow. Yeah, and there's an interaction right there that's happening with the top mark here. This guy. It's a breakdown right there. Yikes. And there's another one. So I'm trying to get the angle right, and it's probably not perfect, but there's this right there. And then this here is the middle. And this would be, I don't know where that would be going to. Yeah, I think beyond that, we're kind of stuck wondering, but I'm just picking that as a date. Possibility. What about the wave? Because that looks pretty dang good for me when I look at this big picture. That looks right. It looks like that's where you'd have the breakdown. It'd be like a double sine wave cross. One right here, one right here. And then, golly, it's like really tight. What if it doesn't hit that number? I guess it doesn't matter. Maybe it doesn't go down as far, but I don't get how you get back to, unless they expect this to like rally and then drop again, like have a big pump in after earnings and like just rally really hard and then drop again because of some like announcement like that. I'm not sure. This looks right to me though. And then you can kind of trade low around earnings. You can trade below 4. Do whatever you want to do. It could be a accumulation, it could be a distribution, doesn't matter. But it sets up a floor here, so then if you need to, you can go back and get that other gap. I'm curious how low that would go if it comes down. Comes down to 2. And then you hit 2 way out here in like May. And then again, it's like the June move. Seems a little ridiculous, but I'm not sure this line would be followed all the way, but it would be very close. Yeah, it hits 2 in June. It kind of follows, because this would be like a massive S curve then. So a lot of times you build out like a double one, like one and then a bigger one. So the larger one would be out here. Yep, right where it needs to be. So you're basically doing the exact same thing you did here, but you're doing it on a bigger picture. So then you generate like another wave here. And it's essentially just a macro version of what we saw in the micro. Because usually on an S-curve, you get doubles. You get an S-curve on this side and an S-curve on this side. So this is like a huge distribution effort if they can get it up to 8s. That follows. That's actually more in line with what we've seen on... I mean, I don't like that it's like that, but that's a lot closer with what we've seen on the build out in terms of timing. Man, this could rally pretty far up too. I've got it kind of stopping short, but it could actually be a very large rally here. This is hard for me to believe. Is he watching? Yeah.
I know.
It's kid friendly enough. I heard the music. I watched it. It's got some scary parts, but Dr. Smith is still evil-ish. Well, he sneaks aboard. He's not really a doctor. Oh yeah, it's a girl in this one. That's right. It's Parker Posey, right?
Yeah.
Yeah, she's still evil.
Why does she sneak?
Maybe, I don't know. This part, I don't really want to get too far ahead of myself, but this part's kind of debatable. I think there's a little bit of an issue here. If this is highly volatile, there could be some pretty massive swings in this area. Maybe again, earnings related before or after. Yeah, it looks bad, but it follows through pretty well. This looks like a huge version of the same thing we've always talked about, which is a quadruple flush. Again, it seems a little ridiculous till you look at 2020 and you're like, oh yeah, this happened before. It did. These were massive swings. It may think that this can't happen. This is a 75% downward move over the course of just a few months. You might think this is somehow magically different, but it's not. It's the same move. You'll hear a lot of they can't do this kind of stuff. And all I would say is that it doesn't have to be the exact same for history to kind of repeat itself here. And I'm telling you guys, it's the same setup. Like, even did the same thing at the end. Like, this motion looks ridiculous. It doesn't make any sense. But it's identical. Timing again, kind of like, oh, it's off. It's not the same timing. No, it really is. It's the same. It's the exact same kind of build out. Should be right there. This is a little bit lower. Yeah, so that would be the middle right here of the wave. And this was a 2-year cycle. 1, 2, went from May to May to May. So this would be like September to September to September 2025. Yep. I think we're right. I can't believe if it goes up there, I would be so ridiculous off on timing, but at least the very least it would be correct in terms of like where it went price wise, because I genuinely think this is possible. It looks ridiculous. I don't know, guys. What would I do if I'm right? I have no idea. I guess I just make money, but finally. Big December rally here, and then big sell-off going into March. Bit of a bounce, quieter, a little bit quieter for a few months, and then another big sell-off later on in near summer. It seems ridiculous, but I keep coming back to it. It just doesn't look wrong to me. There's a part of me that doesn't want to do it. Obviously, kind of want to just stay high up, follow that more moderate route. ChargePoint's up 10%, really pushing. IWM's at 2%. AMC's still holding pretty strong around 480. It's at 479 at 5% up. I'm really not that concerned about this week on the whole. I think it looks pretty good. I would be saying, maybe going into next week could be some trepidation down and back up. Not seeing a lot of evidence that suggests you'd break down again. Not yet. I'm still of the opinion this is what we're going to do. I know that other people are going to disagree, but I think this quad flush is in our favor to go back up. I think the rally is strong. I think the rally should get you at least a 6. And when we're talking about maybe extension up to 850s, 860s. For GME, it looks back and forth today. It kind of had a really tall wick early in the day. I'm on the 4-hour here. It didn't look too hot. I still don't think it's going to make huge advances until maybe earnings. And I guess if it did, it would be running up into earnings. Right now on the 4-hour, very divergent. But we mentioned this before. It did something kind of similar in May, right before it took off to the upside. On the 4-hour, there was a overbought period right here going from May 3rd to about May 10th. And during that time, GME didn't struggle really at all. It made higher highs, lower highs, higher lows, which is consolidation. And then it pushed up. It was very textbook breakout right here. So you'd want to see something kind of similar if you're expecting that push. I'm not feeling like it's as strong, although there is, some resemblance. There's obviously the higher lows. I think the lower highs didn't happen back here. That bothered me a bit. So this looks like an extension that's a bit weak. So I was saying that it looked a little weaker than expected coming into this top. It's already hit my targets, so I'm not really going to sit around and complain. If it doesn't work out, it doesn't work out. It already kind of backed up to 25, like it's checked that. On the big picture, you can see that. No argument there. There's definitely like a divergent kind of middle. So the similarities are sort of coming to an end. This had a push up that held, and then it broke out, went really hard. This has a push up that didn't really hold. It actually dropped really low, and it pushed up, and it looks like it's hooking. So again, it's a little bit weak. I don't know if I would expect much until earnings, which again is about on the 4th. So maybe at earnings you might get a big bump. Like lately, I feel like earnings have been kind of sell-off periods. Yeah, they've been pushing it up into earnings and then selling off. That's at least the last 2 times. Same thing happened back here. Kind of a little rise into earnings. A little rise and then kind of continued lightly. That doesn't really bode well. It kind of, altogether it doesn't look super strong. Volume is decent, and it's jumped the creek, but I would not be surprised if it does push up into earnings and it gets here a little early. Maybe we get a little rally that goes up to the 30s, maybe even as high as 40, and then after earnings, frankly, I think it could just sell down. I've got it kind of long-winded outward here, but technically that creek is really low. And again, if we're talking about this as like a double kind of cat ear motion, could be a massive distribution motion, this big arc up. I don't think it's necessarily bullish.
But I've already made that case that I didn't think it was going to hold. So I thought it'd probably get a push up to at most 38 here. And I think this is very likely still. So I'm going to hold to my guns on it and say that I still think it's possible we can get another push here. So what we might see on RSI is that this becomes like a cross up, like an M cross, and then you get that second top RSI push right before earnings. So I would wait and see what happens at the end of the week and then going into next week. But I would venture to guess that's probably what we see here is like a double top of overbought nature on the 4 hour. And so you're going to get a bit of a valley period, maybe sideways chopping here. There's a pink marker that I used, seemed irrelevant, but it was a long-term parallel that I expected. So I think if we can hold that, I'll kind of remove some of the clutter here for you so that you can see what I'm talking about, because it's a little bit cluttered and I don't like that. Okay, we're about at the 50% mark, which is right to 28.13. So let's remember that number, because I think that's about the halfway point. So I think 28.13, let's push this out a bit. So I think at 28.13, so you might get another jump. If you can hold 28.13 this week, yeah, that seems about right. This should be where this is. I think you'll get that other jump, the SOS, going into maybe Monday or Tuesday of next week, and then potentially we could rally up pretty far. I'm not going to pick out any new targets at this point. I'm just going to kind of trust what I have. It's not impossible. It's weaker. It could go up to like 33.73, something like that. But for now, that's what I would say. And if it goes too fast, like right before earnings, this could be more like 37.50. So I'm just going to go 37.50 to 38.50 because I think there's a bit of a range there. I don't think it'd be wise to pick like an exact number. It just depends on when it gets there. So this is what I would expect. And I think after earnings probably sells off. Starts working its way back down again. And that would be consistent with what we see on AMC as well, that it could pop going into the week of the 9th and then start selling back down going into like mid to late December. So it has like an early rally and then starts selling off. Yeah, going into the new year. It's very consistent. Not very high, I know, but I'm not sure. You know, if it goes higher, great, but I just don't think it's going to. I think by the 30th, you probably have confirmation of a failure maybe to continue. Yep. So I'm going to stick with my original assessment there. Everyone thinks that it's going to go up to triple digits soon. I don't think so, but, you know, GME is weird. It does have weird moves sometimes. Here's what I think. I think this is like a 50-50 S-curve, and that this seems really reasonable. And there's a reason that it's hitting this mark. It's a back test on a sideways supply zone that's really important around 38 to 40. It's also consistent with an idea that it's doing like a double top here, 1, 1, 2, on sell down like a distribution here. You start a macro distribution area, then you can drive the price really low. I already talked about this because I didn't really like it. I don't like to talk about it because the GME crowd gets pretty angry sometimes, but not all the time, but just sometimes you hear that kind of. I think AMC crowd tends to be a bit meaner. But I think it's going to come down to this like $15 level and then just dump. I really do. I know it seems bad, but I think this is working out a large distribution, and they're doing it to get to this macro target, which is actually really bullish. It's basically the exact same as AMC in that regard. It's essentially like a quadruple flush. So this is essentially like a paw with a huge cat ear, and then it's going to drop down really low. into May of next year. And I think the point of that is obvious for me, because I look at it, I don't think it's a bad thing. It looks bad to a lot of people, but I think of it as like a massive quadruple flush with a spring. And the purpose of it is to get you back and check this like historic level way back here at like 7s, which comes back to some of the earliest trends that GME established, like the original top and the original drop down level from 2007 to 2015. From a TA standpoint, if I looked at this and it was any other stock, I wouldn't be surprised by that at all. And even when you look at the back test that was made in March of 2021, it comes down and checks that mark right here. And there's a little hesitation on the way up at 9s. So for me, it's not even like controversial. It's just looking at it, that will be the bottom of the trend. It's where it took off from. Like everything kind of points that way. This massive wedge points to it. It just looks like a big breakout that's trying to go back down and check it. And if it holds, this is where I think you get a massive rally. And it potentially goes up to triple digits. Genuinely. If it doesn't hold, then this does look like a massive distribution. It looks like a 1, 2 with a second cat ear, right? Between the ears. Here's ear 1, here's ear 2. And you could sell all the way back down and then go again. Maybe it does the same thing again. I don't know. It just springs all the way back up to the top. But I could tell you right now that that was not checked. This has not been checked. And it's clearly where we were aiming for. And this is like an early break to get more sellers. And then to try to sell back down. I don't think the shorts are done yet. You're going to try to take it down to 750. So I don't have any hopium to give you because that's just, all I can do is give you the straight TA for it. That's what I think is most likely is happening. And I do think, you look at like the weekly, for example, it's kind of evidenced here as well. Like it got really overbought really fast here in June. And I think it's trying to do it again. All it has to do is push up a little bit more. This will be overbought again on the weekly. And it's just an opportunity. And then it'll take it all the way back down to being oversold again over time. So maybe it doesn't go that far. I don't know. I mean, folks probably felt the same way when it was back at 10 here, that it wouldn't go down that low, and it did. And at this point, I don't think it's necessarily like that complex. I really feel like it's very simple, like straightforward. To me, that is a very clear like little spring breakout of a wedge. When like 60% of the wedge broke out, hit that target already, it's done. Now it either forms a reaccumulation and continues, in which case this has to cross up, which I've got here on the chart. It's a very small little diagram, but this would have to cross to the upside. And if it does that, then you might get continuation. If it doesn't do that, then it's just exactly what I said it is. I don't feel like there's any other option here. So it has to cross up here very, very soon into January, or it's probably going to come all the way back. And that would be indicative of what this was all about. Pump up, sell, pump up, sell. You can see the high volume here. This is where Stockfather and I agree and disagree. If you've been listening to him, he's been talking about this as like, oh, I think it's going to come back down to like 2. I don't disagree. I just think it's going to happen in a double flush. That's that's where we kind of have differed. So, but I think it makes sense timing wise. So I don't know. This is what I expect. And so if I look at GME, it could be very much the same. It doesn't have to be exactly the same. GME's always had a little bit stronger of a hold. It's not at all-time lows, for example, right now. That's a big deal. So even if it went down to $7 or $8, it's not at all-time lows, it's not even close. It's still above like this. It's really just back testing this previous top. It's very different than like AMC being essentially making a new low. But the end result ends up being much the same because then both of them have, if they have their rallies, they rally in the same brackets. Like this rallies back up to the high bracket here, 256. This rallies, it's very similar sounding to the first move. This rallies back up eventually to the 80s and 60s. Again, similar sounding to the first move. So I don't find it to be very controversial, but I can totally get why some folks would be like, that's not going to happen, you know? Yeah, I get it. I do. Yep, this is where I think the magic happens. So, really, I've got it drawn kind of wide, but it should be much faster than that. This would already be like up. You wouldn't hit the highs here. You'd actually go past it and then come back through. So it looks really slow, but it's not. This one should be over here. I messed that up. It'd be like right there. This would push above the top. It'd have to breach this top. And then it's about as far as you'd have to go. This is basically the move. So late 2025, you'd be coming back up, potentially. That's what I think. And I think it's established this way elsewhere as well. I think this is the main evidence that I have that this is all right. That guy, right there. So, all right, guys, I'm done. I'm not going to stream anymore this week. I know that we've been back and forth a few rounds, but I hope you guys have a good holiday. Enjoy it. I will see you again next week.